Bitcoin is worthless if you do nothing with it. If no one trades another Bitcoin ever again, it falls to zero.
Hold on. That's a very big statement.
There's chaos in the universe. It's always increasing. Everyone's going to go to war at some point, so everyone's beefing up on defense.
The incentives you create by allowing the government to steal is so wrong that we're going to create an entirely new system.
We've accomplished nothing. We have not done what Bitcoin is there to do, and therefore we will be rewarded with zero.
Do you think that we are in a truly once-in-a-lifetime moment that people should stop, pay attention, figure out what their crypto strategy is?
Absolutely. We are at the culmination of the post-World War II period. We've had 4 generations since then. So all the people who fought in the war are pretty much dead. So we've lost that knowledge, that reticence to ever do something stupid and terrible like a total world war ever again. Now we have people around the world who are celebrating these leaders who are bombing indiscriminate civilians because it, solves their particular issue, whatever that is, because we don't have this institutional knowledge because everyone else is dead who participated in World War II. So, and we also have a situation where the United States did very well out of World War II and created a whole global system to preserve their hegemony, and now that's coming undone. And when top dog is getting challenged by the dogs at the bottom, there's always conflict. And so we're at that point in time. We have no institutional memory of how bad war is, and we have a preeminent power that's being challenged by others who was going to resort to violence to preserve their position. I think we are at this situation that has happened in the past. Many times empires have come and gone, but now we have, for the first time in human history, an ability to save in a currency, Bitcoin and the cryptocurrency situation in general, that is globally owned by everyone. And so the people own a new type of money. It's people around the world can still sell their fiat, whatever, and buy Bitcoin. It's not blocked or banned in most places yet. And so you're able to move wealth between this analog system that we've had for thousands of years into a new way of socially creating financial wealth, a financial system, a new type of money. This sort of situation is never going to happen again because we have all these fiat assets that are being depreciated and everyone knows it's happening. And now we have this little small door called Bitcoin, and people are starting to go through the small door. And that's why the Bitcoin price is up, 50% or 60% this year already, as now we have the institutional investors saying, yeah, I understand this game is rigged. I helped rig the game. Now I have a product where I can get out of this mess that I created, get me the fuck out of government bonds. I want some of this Bitcoin too. So now everyone's competing to get in this little door, and that's why the price is going up. So this is a once-in-a-lifetime opportunity. We have a system reset, and we have a way to preserve wealth from the old system and bring it into the new system, and that's what crypto is.
All right, that's powerful. So if we think of crypto as the ark that we can all get on before the rain comes, the catch is that you've got all kinds of different cryptocurrencies, all kinds of different theses about which one we should be getting into. What's your take? How do you break down the world of crypto?
So Bitcoin is the reserve currency, if you will, of crypto. It's the ultrasound money. It's crypto money. And it's proven that's what it cares about. The community of Bitcoin cares about security and the immutability of the Bitcoin blockchain, and it wants to make it the soundest crypto money. So if you're thinking about, okay, I don't know anything else about crypto, but I kind of believe in this whole inflation and changing global relations story, then just buy Bitcoin, right? It's got the largest market cap. It's very conservative with the types of things that are added to the network because everyone wants to make sure that Bitcoin is always the hardest money. So the experimentation is much lower on Bitcoin than other networks. Next, you go to, well, okay, can we build a new financial system within crypto? That's decentralized finance, DeFi. And Ethereum, in my worldview, is the best decentralized computer that has been built thus far. And so if you think, okay, I think we need a new financial system that's based on these crypto assets, that's decentralized, that's transparent, blah, 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 then Ethereum is where it's at. And once you get past those two things, I'd say most other things within crypto are either some sort of application that rides on top of Ethereum or a decentralized like computer, another blockchain trying to disrupt either being the best money or the best decentralized computer. And then you sort of have to get into the weeds on understanding what it is these protocols are trying to do. So for those who just want to like close their eyes and buy something that's crypto safe, I'm not saying that's, there's no risk here. I would say Bitcoin and Ethereum are where you should start your journey. And once you say, okay, maybe there's some things I think these protocols could do better, or I've been hearing some things about these exciting new, very smart people building something, then you start going down the rabbit hole of other coins that do other things and obviously have more risk because they're experimenting more.
What do you advise people around volatility? I think one of the things that draws people to crypto specifically is the volatility. I'm actually very curious to see what happens to cultural energy around crypto once it's the tried and true thing.
Volatility is your friend. The reason why you're even thinking about crypto is because the price went up a lot and you heard about it. So you want volatility. The entire TradFi traditional government apparatus is trying to do something unnatural, which is remove volatility from the system. Entropy is always increasing. It is unnatural to try to suppress volatility. Think about it like your lawn, if you have one at your house, right? Entropy says the grass keeps growing because that's what the grass does. What do you try to do? You spend energy to cut the grass because you want it to look a certain way, a certain non-volatile, pleasant way. But it's unnatural. If you don't have the energy to cut the grass grows. And the grass will grow long after you're gone because you can only do this so long. And that's the same thing governments and central banks and banking systems are doing. They're trying to squash volatility. We don't want volatility. And they're trying to convince you that it's safe. But there is no such thing as safe. There's chaos in the universe. It's always increasing. They're doing the unnatural thing by trying to remove it. And then at certain points, they can't do it anymore. And then there's an explosion somewhere, whether it's a war, whether it's a financial crisis. So embrace the volatility. This is the nature of the universe. And that's why Bitcoin and crypto is a good thing because there is none of this manipulation. It goes up, it goes down, but it's a true reflection of what the universe is. So I think volatility is a good thing. Obviously, that means if you use leverage, be very judicious about it. If leverage trading is your thing, that better be your full-time job. Like you better eat, breathe, and sleep the thing that you're trading because that's the only way that you're going to survive. Thinking that you're going to get home from work, put on some highly leveraged crypto trade, and just trade for a few hours and then go to sleep, you will lose all your money.
Okay, volatility as a good thing. Do you think that crypto will lose some of its potency, its cultural energy when the volatility begins dying down? Or will, like in a given cycle, the way that this traditionally goes is you've got Bitcoin, which has massive volatility, but is less volatile than some of the what people lovingly call shit coins. So people tend to go down the curve. So they'll start with Bitcoin, they'll ride that up. As that begins to stabilize and chop sideways, then they're going to go to the next volatile. If that crashes or whatever, they go to the next, to the next, to the next, constantly chasing volatility. Will that forever be? People will just keep introducing new and highly volatile things, or will it become more like gold, where it's a far more stable entity?
Well, Bitcoin has law of large numbers. The larger it gets, the less volatile it become. And as you mentioned, right, for people who are saying, I want to make big gains in a short period of time, Bitcoin might not do it for them. They say, well, I need the next new thing. And so they start trading whatever the new shiny bauble is that's being sold out there in crypto land. There's nothing wrong with that. You just recognize what you're trying to do. If you're saying, I want to save in a ultrasound money, then yes, the volatility is not a good or bad thing for Bitcoin. It will go down over time as the asset class gets bigger. If you're saying, I need the volatility, I'm a professional trader, this is what I'm here for, then there will always be a new thing to trade, because the great thing about crypto is it's the only free market left where humans are expressing themselves on whatever it is we think is valuable. There's no manipulating force with, an unlimited bag of fiat currency that's telling us what is a good and a bad investment. And so there will always be volatile things within the crypto ecosystem, so long as there's human beings trading it. And then I guess we'll have machines too soon, these AI operators in the ecosystem.
It's really interesting. So I want to get to the essence of what crypto is. I want to get to the essence of what markets are, why people play them. So I really want to be the contribution that I make to, anything that I do, quite frankly, is helping people get to the essence of it, to think from first principles, to build a thesis, even though ultimately I think that only the simple spreads. I do want people to be able to understand the nature of this. Do you see markets as gambling? Like, are they gambling at their very nature?
I'd move it even more fundamental. We are gamblers, everyone, all the time, constantly, because we don't know what the future holds. So let's take an example, and I wrote this in a previous essay. So imagine there's a building, you walk into the building, you can either take the stairs or take an elevator. So taking the stairs, using your own feet, walking up is safer than the mechanical thing, which is an elevator. But walking up the stairs takes more energy than riding up the elevator. So what do? Well, your brain, whether you're conscious of it or not, is constantly evaluating the probability that if I do one of these things, will there be harm that comes to me? And is the probability of that harm outweighed by the gain, whether it's time or energy, by using one or the other modes of transportation? And so you're gambling. You don't know do you know if this elevator is going to break down and fall 30 flights in an instant? No, but you believe that there has been a credible engineer that's designed this piece of technology, that there's a government building codes that govern how it's been installed and how it's been maintained. So the risk of me taking this elevator, even though I don't know if it's going to fail when I get on it, is very, very low. Therefore, I will take the elevator because it's faster and less energy spent than walking up the stairs to the top of the building. Right. So we gamble all day, every day, because the future is unknown. So for people to say that, oh, markets are bad because it's gambling, no, your whole life is a gamble. You do not know what's going to happen one moment to the next. You are constantly assigning a probability to the future. And that's what the market is. The market is for a particular thing. What does the crowd say the probability of the future of this company building this product, making this money, or this asset being worth whatever it's worth in the future? What does the crowd think? That's what the market is telling us. And the market gives us great signals as to what the crowd actually thinks, because we're putting our money on the line. And what is money? Money is just energy and our time in an abstracted form. That's why money is the most important thing in any society, because if you degrade the value of money, you degrade someone's time and their effort and their energy. And it's an affront to human dignity if you degrade the value of the money that they earn by doing work to, earn a living, pay for food, blah, blah, blah. Right. So markets are gambling, but your entire existence is a gamble as well. So I don't think there's a problem with that.
Oof. Okay, this is really interesting, and it goes back to what I was talking about with the ability to save. From where I'm sitting, feels like it should be a human right. Okay, let me just go back and recap what you said. Money is energy and time in an abstracted form. So you go to work, and you do a thing that the world says that they value, which is why somebody's willing to pay you for that, because they're able to create a thing that they sell to somebody. So you spend energy and time creating a thing that people want to buy. Now, what that allows you to do is proof of work. So you have this unit of money that you've exchanged for your labor. Now, when you are putting that into a system where they can socialize losses, so it drives me crazy how complicated this all is. But let me just walk everybody through. What ends up happening in the current Keynesian economic model that we have, which I'll give a brief summation of Keynesian economics. If you see that I've gone wrong in any way, please jump in. Keynesian economics is basically, hey, the market left to its natural devices is going to swing wildly. There are going to be massive upsides. There are going to be massive downsides. And if you if you get to one of the moments where the economy is not able to progress forward, part of the reason it may not be progressing forward, and this is the break from the classical model, is that people are just poor. And so if you stimulate money into the system, now you can get the economy moving again. And so you flatten the curves both on the upside and the downside. So you're squeezing the volatility by going back to your mowing the lawn analogy. You're injecting energy into the system. The government is putting this new money, which they're making up out of thin air, into the system in order to get people feeling like they have money again. It is very much a man-made manipulation of the system, but this is essentially what we've been doing since the Great Depression. So Keynes comes up with this idea in the Great Depression, and he realizes, hey, wait a second, there are people willing to work, there are factories here that are not at capacity, there are even people willing to buy, and if they just had money, then the economy would start moving again. So, hey, make up money. Okay, sounds amazing until you put it together with what you just said and the fact that this is socializing losses. So, all right, something bad happens. 1929, we have an economic collapse. People got into a bubble. We just got into a bad situation for a whole host of reasons I won't go into right now. But anyway, bad thing happens. The government then says, oh, I'm going to print more money, which is now taking that loss and spreading it across everybody. That's what happens when you're printing money, because there's no new goods put into the system that anybody wants. There's no new labor that has gone into the system. There's only the artifact, what should be the artifact of somebody's time and energy. But it's not, it's just made up. And so that ends up diluting across everybody. So you have individual losses that are spread across everybody to the benefit of only people that hold assets. So now you get this massive bifurcation. So I'm very worried about the hollowing of the middle class, and going back to what exactly creates this, as far as I can tell, is this. It is this moment right here where you are socializing losses across everybody. So the poor, the middle class, and the wealthy are all going to have their buying power reduced, but only people that have assets are going to get wealthier. And so what's crazy is if you look at the moment that we're living in right now, you have a growth in the upper class. So if you break lower, middle, upper, you have growth in the upper and you have growth in the lower. And only the middle class is going down. Now, at first I was like, well, that's kind of exciting. You actually have more people going into the upper class than you have going into the lower class. Amazing, right? But as you hollow that out, you get just literal division and warfare within a country. All of that makes sense based on what you just said, which is that money is your time and energy in an abstract form, and it is an affront to human dignity when you begin messing with that system.
Yes.
Now, laying all that out, this is why I am really unnerved by the moment that we're living in now. And I'll try to tie this all back to crypto as the potential arc that we're all going to get on as the rain continues to fall. But just today, one of my employees came up to me and was like, I'm finally seeing the data that backs up what I feel, which is I just cannot get, she didn't say American dream, but that was the punchline. I can't afford to buy a house. I see other people making huge amounts of money and I'm not able to get ahead. And on paper, it seems like I'm making enough money, but I just don't feel like I'm getting anywhere. And so she isn't positive about the moment that she's in, nor is she optimistic about the future, because there are these cues that people look to: buying nice things, having a nice car, having a nice house, feeling like you can afford children, feeling like when you retire, it's going to be travel and fancy restaurants, and it isn't going to be me working until I'm 85 and, super unhappy. And so when you take that, you take the anger, you take the frustration, you take the GameStop of it all. Again, people YOLOing in, people, I don't want to say following sort of culty ideas, but like an idea will gain momentum and they just get on board with that momentum. Versus doing what you said, get your spending under control, figure out your risk appetite, deploy that into an asset class that you believe matches your risk appetite and is going to go somewhere. Okay, so there's been a demoralization of people. They don't understand what it is, but it's, not to be too harsh, but it's Keynesian economics. It's the manipulation of the currency. It's the massive inflation to deal with debt. Okay, if all of that is true, then it certainly explains this great migration from TradFi over into crypto. Does all of that feel right? Or do you feel like I'm being unfair to the current economic situation, to Keynesian economics? Maybe I don't understand it.
I mean, the only wrinkle that I would say is that if the government is able to borrow money and build things of real economic value, like, okay, in the 1950s, Eisenhower did in the United States, U.S. President Eisenhower did the Highway Act, right? And the U.S. built however many millions of kilometers of roads, which lowered the cost of transportation, had all this, you basically had the explosion of mass market stuff because you could ship things from coast to coast, blah, blah, blah. In China, you had building of hydroelectric dams. Okay, there was some environmental costs, but it brought electricity to the countryside. And so these are only projects that governments can do because they have the ability to tax and spend on a aggregate level. So I'd say the only caveat is if you're able as a government to build these types of things that have a rate of return greater than the implicit debt cost that you're hoisting on the economy, then those are good things to do. The problem is that there's a finite amount of projects like that. The society that you're building these things in can only accept so much of this infrastructure spending. The problem is that governments don't know when to stop. They don't know. They think everything's going to be like the Highway Act in the 1950s in the United States, or building Three Gorges Dam in China, versus where it is today, which is they're building a lot of stuff that has no value because it'll never earn back its return.
If you want to be able to enjoy a glass of wine with dinner or a cold one after a long day, but you don't want to take away from your ability to focus and be productive the next day, you got to check out ZBiotics. ZBiotics pre-alcohol probiotic drink is the world's first genetically engineered probiotic. It was invented by PhD scientists to tackle rough mornings after drinking. Here's how it works. When you drink, alcohol gets converted into a toxic byproduct in the gut. It's this byproduct, not dehydration, that's to blame for your rough next day. ZBiotics produces an enzyme to break this byproduct down. Just remember to make ZBiotics your first drink of the night, drink responsibly, and you'll feel your best tomorrow. Go to zbiotics.com/impact to get 15% off your first order when you use impact at checkout. ZBiotics is backed with a 100% money-back guarantee, so if you're unsatisfied for any reason, they'll refund your money, no questions asked. Remember to head to zbiotics.com/impact and use the code IMPACT at checkout for 15% off.
What are we building today?
Well, I mean, I'm saying we as a global society, I don't know what politicians in the US are building, or China or anywhere. I'm just making a sort of a blanket statement of people. I don't know, isn't Biden doing, what's it, the Inflation Reduction Act or some sort of act that they're building stuff and all these government subsidies to build things, whether it's electrification of the grid or whatever, right? There's industrial policies for governments around the world saying we need to build whatever it is we think is valuable as a government. Sometimes it's rooted in market signals. Other time it's just, hey, I want to give a backhander to my boy in my district. That's the problem. There is good that can be done doing that, but politicians abuse it. And we're at the abusive stage of, the initial gains of building some of these pieces of public infrastructure. Now we're just doing stupid shit.
Ray Dalio talks a lot about debt cycles and the inevitability of how this just loops over and over. Is all of this inevitable? And do you think that the migration to cryptocurrency will be complete and we'll never be back in a system like this again? Or do you think these systems will coexist?
So it's definitely not inevitable. The great example is what's happened down in Argentina. So the policy of Argentina is, if you've never been, it's a beautiful country. I fucking love it down there. I've been skiing there, and to the falls and all kind of stuff. It's got a massive coastline. It's got arable land, great food, great wine, space for people to live, and yet it's mired in poverty and inflation because of political choices of Keynesian taken to, another level, the Peronist sort of political culture down there. And the people, after, I don't know, 50 or 60 years of this shit, are finally fed up. Let's try something different. And you have President Milei down there who basically campaigned on a promise of, I'm going to cut down government services, close a bunch of ministries. We're going to balance the budget. And he's already balanced the budget, I think, within the first quarter or two of him being there. And so we'll see how the economy reacts. So the people do have an option. They can reject what the elites are telling them. Oh, there's only one way to do this, which is print money and do Keynesian economics. No, there's another way, which is you earn them, you propose taxes. We, the people, agree to pay these taxes, and you, the government, do what we told you to do. Build roads, build schools, healthcare, police force, blah, 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 and don't do anything else. And this other bullshit that the government has tacked on to their responsibilities and created all these deficits. So there is another option, but it requires people to understand, where's the situation. There isn't just one way to do things. There's another way to do things. There's a way to run the government like you run your household. You make $100 a month. You're only able to spend $100. That's it.
No, nobody runs our household like that, though. There's something about the culture that we're in right now, because if you look at debt, the government operates on a debt. Businesses are all in debt. Individuals are all in debt. We were at 0% interest rates for so long. Money seemed free. People just took on debt. And so it really requires a cultural shift more than anything. And I worry that what we're seeing in Argentina is that, oh yeah, there is a point at which it is so brutally painful that people would rather austerity than continuing to suffer the way they've been suffering. But are we anywhere near that point? Or maybe a better question, can we make the change without needing that amount of suffering?
No, because the loss is there. The debt has been taken. There's been unproductive activity. And this is the global thing, right? Global debt to GDP is, I think, 360% per the World Bank or something like that. And it's been accelerating over the past 2 decades, right? So there is an implicit deadweight loss in the system. The question is, who bears the loss? Now, that's what every government is tackling. What does every government do? They push that loss down onto the people themselves via an inflation tax. But the loss has to be paid. It's not like the Argentinian situation is without losses. People are going to lose money in austerity, right? The question is, who loses the money? So if it's, I don't like austerity because deflation destroys the banking system. Well, in a capitalist society, what happens when a bank goes bankrupt? The unsecured creditors take over the bank. So put the fucking CEOs of Citibank and JP Morgan and Goldman Sachs and Morgan Stanley on the fucking street after 2008 and give the bank to the depositors. That's how bankruptcy law should work. It didn't work in that situation. They would rather save the managers of the banks than allow the people who are unsecured creditors of the bank take it over and run it how they think it should be run. So I think we being a lot of capitalistic systems, and even in China, they have these sorts of bankruptcy sort of laws. It's just that nobody wants to use them because it's going to disenfranchise the elites. We have all the tools available to us. We've thought about these things. We're just unwilling to use them because of who bears the pain. So that's the situation. But I think when more people realize the reason why crypto exists, crypto is valuable because we're unwilling to take these losses. If all of a sudden the United States and China and Europe and Japan said, we're going to run balanced budgets, we're going to cut out 75% of all these government services, I would be thinking hard about whether I want to be long crypto at that point. And maybe I should be doing something else because the societal mindset has changed to something more responsible. And maybe we're not going to see these massive price gains in crypto because the fiat debasement part of the equation has ceased.
Okay, so if that's the scenario that would cause you to rethink crypto, if all of those governments were, hey, we're going to be like Argentina, we're going to get our stuff together, we're going to run a balanced budget, how would you respond to that in terms of your investment strategy?
There's obviously going to be some a lot of short-term pain. And then you have to see, what is Bitcoin or crypto worth?
Really fast, will you explain why will there be short-term pain? What happens in austerity when we're not printing? Like right now, the US government is so in debt that surely if they were to just balance the budget immediately without printing any more money, that holders of government treasuries, bonds, poof, they would be gone.
Yeah. Who owns the bonds? Rich people and banks. So that's who suffers. If who's making all these, the U.S. Treasury spends about $1 trillion on an annualized basis in interest payments. Who is getting these interest payments? All the motherfuckers I saw at the ski resort, who now get 5.5% on their cash. And great, I own these Treasury bonds, I'm getting 5.5%. I've got a good capital base. I'm going to go enjoy the world, right? It's all the rich people who own these financial assets. They're now worth a lot less in a deflationary environment. The primary one being government bonds, who now the government's going to balance the budget. And guess what? All that debt, we're just going to gone. I mean, you can do it. Debt jubilee. It's happened in the past. Study the Roman Empire and, Greek Solon and certain people. Like, it's a feature of the society where a leader comes and says, this is not a good idea for the rich to be rentiers on the entire productive capacity of society. Let's destroy that asset that they have and re-equalize system. We forget that this happens, but it has happened in the past. And so if we did something akin to a debt jubilee, who loses? Rich people. And then at some point, if the government does float another bond with a more balanced budget, then, that might be a good investment at a very high rate of return. Is that better than owning something that has made its gains in fiat terms? I'm not saying that the Bitcoin network is not valuable. I separate Bitcoin into technology plus liquidity. But if you remove the liquidity piece, what's the technology worth? I don't know. It's worth a lot for sure. But removing that liquidity piece from the equation for crypto probably means that it corrects quite substantially. And you'd want to own other types of assets now that, we have, society has decided that we're going to run our public affairs in a different manner.
All right, really fast. When you say liquidity, are you talking trading volume, just the amount of back and forth?
Credit money, credit fiat money.
Sorry, you said Bitcoin is the technology plus liquidity. So you mean if nobody is manipulating fiat and printing, then you take a fundamentally different calculation on the value of Bitcoin.
Correct.
Interesting. Liquidity is one of those words that I've long been like, okay, I think I know what people mean by this, but clearly not. So when you say liquidity, you mean printing.
Yes. I mean, how much credit money has been created by the government and the banking system? And obviously, the more fiat that's around, scarce assets, finite assets like Bitcoin go up in fiat terms. But that's just a denominator issue. It's not anything. The value of Bitcoin itself as a network of peer-to-peer decentralized electronic money, again, that has a value. What is that value? I think it's very valuable. Is it, I don't know, what's the Bitcoin market now, like 2 trillion or whatever it is? Is it that? So if we removed all the money printing, we said, the US dollar, the yen, the yuan, the euro is now sort of very stable currencies, not going to go up or down much in terms of their supply. Do I want to own crypto anymore? Maybe not at this price. Maybe there's something else I'd rather own. Maybe I want to own a power plant in a new productive country where the people feel happy and engaged and want to do productive things. Maybe I want to own something different. So that's just the mental, construct that I'm operating under, because the system will change. As you said, there is this anger. We have global conflict sprouting up around the world. We are not going to be in this Keynesian system in the next 40 or 50 years. There will be a different system. I don't know what it is. It could be that the people all wake up and they say, this is not for me. We're going to create a more equitable system, or they create something even more fucked up than the one we're in today. I don't know, but we're just going to change.
Okay. A couple questions. One, did Argentina default on their debts?
They have defaulted multiple times on their peso, dollar. Like, you could probably write a whole university thesis on the history of Argentinian monetary policy.
I mean, specifically since Milei took office, is that part of his strategy? Like, hey, debt jubilee.
I'm not sure.
Okay. I'd be very curious to know that. So, okay, one possible way for this to end is you have an Argentinian solution. The country wakes up, they realize, hey, I'm not willing to suffer like this anymore. It's a bunch of rich assholes that are controlling the place. We have all these programs to take care of people, but we don't actually have the money. And so we've inflated our currency into meaninglessness. This is dumb. So let's elect somebody. Let's take our lumps, austerity measures. The system's not really working anyway. So I imagine to some extent that probably even the wealthy feel like they're on such unstable ground. They've probably long ago fled to dollars or something like that. Anyway, if they have the wherewithal to do it. We elect this guy. He comes in literally with a chainsaw. For people that haven't seen the footage, it is hilarious. And he just cuts, removing entire portions of the government, entire departments. Okay, so that's one way to do it. The other way to do it is war. Why does the debt, inflation through money printing, why does that lead to this changing dynamic between countries? I can't mentally track. I get it. I've seen it. I know the data, but I don't understand why that happens.
So when you're printing money, you're inducing economic activity that's unnatural. So you're producing stuff that you can't sell. So what are most wars about? It's, I have all this excess production. I have people that need to work because that's how I stay in power, because they have a job and money and whatever. They're producing all this stuff. I need someone to sell it to. So if you want to think back to sort of World War I, World War II, you had the major colonial powers each had their own home market. US has, Central and South America. Britain had the Commonwealth. French had the West Indies and sort of parts of Africa. And Germany was like, hey, I'm a white imperial power. I deserve some colonies too. Rather than going into Africa, my colony should be Russia. We read what Hitler wrote. He's writing about taking the Russian land and creating space for the Russian people, for the German people. That's why he did the dumb thing of attacking Russia during the winter. Didn't learn his lesson from Napoleon. The Japanese wanted their colony. They thought they were a powerful colonizer as well. And China, specifically Manchuria, would be their sphere of colonial projection, and their market would be Southeast Asia. And as the Western allied powers challenged that assertion that Germany and Japan could have these colonial spheres of trading influence because they also had overproduction as well. Remember, coming out of the Great Depression, what was the problem? Too much production, nowhere to put it, deflation of assets. Everybody produced too much shit. They needed to sell it somewhere. So that was a genesis of all these of the world wars. Now, what do we have today? China has exhausted its ability to build roads, pump a property bubble. Now they're saying we need to manufacture more stuff. Well, so does America. They need to manufacture more stuff. So does Europe. They need to manufacture more stuff. Why is Europe all pissed off at China right now? Because China's the largest auto exporter in the world, surpassing Germany and Japan. And they're like, oh, fuck. There goes the one industry where we were kicking ass, which was high-end luxury cars and your German and French vehicles. China's beating us at this like hand over foot. So everybody's producing stuff because they're just printing money. Say, go to work, make stuff. And then it's like, okay, where do we sell it? Oh, we need to sell our goods in China. China needs to sell their goods in America. Well, nobody wants to open up their turf to others because they need to sell stuff, not to buy others. And so that's why when you print this money and you have all this uneconomic activity happening, the drive to sell your goods in other markets is what prepares the road to war. Oh, you're not going to let me sell this particular type of product in this country? Well, fuck you, we're going to war. And I'm going to make sure that you can't sell your stuff into my turf. And that is what we're gearing up towards as all the major economic blocks are like, okay, we need to keep people in their jobs. So we're going to print the money, they're going to make stuff. And now where do we sell it?
That is very fascinating. It certainly is not the only reason that we go to war, but that is a very good explanation for how when the wars basic cause is economic, or when the debt begins to get out of hand, why this ends up marching us towards war, that makes a lot of sense. Do you see a way to unwind this? So once is it austerity or war? Are those really the two options? Or do you see us being able to really in this moment use Bitcoin as the arc that allows us to avoid either of those catastrophic floods?
Crypto is a way for you to sidestep some of the negative impacts of austerity. And austerity is not uniformly distributed in terms of its pain, right? The people who have the most pain are those who have the most assets, because the cash flows are depreciated under austerity. There's no more government printing press that's making these things go up in value. So if you did the thing that what you're told to do, get on the hamster wheel, work your ass off, and you were able to, through hard work, build up a fiat nest egg, and you recognize that this situation is untenable in terms of a very small slice of the population getting very, very wealthy while everyone else is suffering, then it behooves you to get out of those fiat assets. Now, previously, there wasn't really an easy way to do that, but now we have crypto. So now if you have fiat assets that are, your saving vehicles, or even just the little bit of fiat money that you're able to save, you can now sidestep. You can vote for austerity to rebuild your society into a more equitable situation, but at the same time preserve the little bit of wealth that you've been able to accumulate in the fiat system by porting it over to crypto. And then, once things have reset, then reevaluating, okay, well, maybe I am okay with owning a government bond that yields 10% if the economy is growing at 5%. That's a great return for me. I don't need to have this crypto thing. Maybe it's too volatile for me. Maybe I lost a little bit of money trading some particular coin. I just want to own some sort of bond in a government that I believe in and respect. Cool. Now, you're getting paid to take that risk, versus now you're not getting paid appropriately to take that risk.
This is a really interesting moment that we live in. So history doesn't repeat, it rhymes. When you look back, I think Ray Dalio has done such a good job of breaking this down, how the debt cycle loops, and how going back 500 years, you see the rise and fall of empires, that they roughly last 150-ish years, that the sequence of events is such that you have a debt jubilee. I mean, I guess it doesn't start with a debt jubilee, but every cycle will repeat with that. And because you said you use that as a way to reset, to get a more equitable situation. But the reality is it's only going to be equitable for a while, because once you're dealing in a world where people clip coins, which is the OG way of inflating money, or the current way, which is you literally you have the Fed buy assets from the government, you're inflating the money supply. You're reducing you reduce its purchasing power. That it is inevitable, if you allow that people will get themselves out of trouble, because if people are in pain, they're going to freak out. They're going to lash out at the government. They're going to say, I want you to protect me, which it's predictable. So that people are going to do that. So you print money so that you can get reelected. So as long as people have to get reelected, and one of the ways to get reelected is to print money, people are going to do that. And so you end up back in this cycle. The fascinating thing is that it only comes down to any one person's individual lifetime. That's all they know, and that's all they really care about. And so if you can push this off 150 years, you really don't care, and it begins to loop. However, we are living through a technological revolution right now that I think is causing a rapid divergence between the generations, which cause them to have very different worldviews. And so you have this, I'll call it a bifurcation, but I really think it's more of a shattering, but just for simplicity's sake, I'll say a bifurcation between people who believe in the traditional system because they know it, they're used to it, it's the devil you know, and then people that believe in, and the way I think about it is, will tomorrow be more digital than today? If yes, why would I ever think that money wouldn't become digitized? And so it just, for me as somebody who breaks on the digital side, when I looked at crypto, I was like, oh yeah, that it makes sense to me. That isn't a fake asset or whatever people call it, magic, internet money. It's all of money is simply a narrative. We all simply decide to agree that, oh, gold has value because it's scarce. The paper money has value because the government says that it does. Crypto has money because there's Bitcoin, there's only 21 million of it, and that's it. And so we all agree that that's the thing. And so I will be very interested to see as we march towards adopting cryptocurrency, if we really can take that as this off-ramp that will avoid us ending up in a hot war. I don't know that governments will allow it to happen. What do you think about that? How stern / violent do you think the government's response is going to be? Will they control it through ETFs, and so same as it ever was? Or will they say, we're not going to allow this and find a way to put capital controls on it?
The smart governments will do the ETF route, which is allow the traditional TradFi people to give you a crypto derivative like a Bitcoin ETF. That's the smart way to do it because it's the non-violent way to do it. And people think that they've escaped this financial apocalypse, but not really. They've only just given their money to BlackRock. And the time in which they actually want to use Bitcoin for what it's there for, which is decentralized money, moving it around 24/7 between whoever they feel like, they'll be told, no, if you want to get out of the ETF, you must sell it back for a fiat and then do with your money what you please, right? You don't own Bitcoin. People think they do. That's the best way to do it. The worst way to do it is to go out and ban it. Because when you ban something as a government, especially in a digital age where people have information at their fingertips, then they go, oh, well, maybe there's something here. Why is the government telling me I can't do it? Maybe I should read a little bit more about this. And then they decide, oh, the government's telling me I shouldn't do it because it's not in their interest. Then I'm going to do it anyways. Because you've banned it, you've given it airtime, you've proven the point that everyone on the crypto ecosystem has been saying for many years, which is the government doesn't have your best interest at heart. That's why they're banning your economic freedom. And then you create the demand for the thing and people will get it anyways, right? So if you think about, the common narrative of like very, authoritarian governments in the West, like, oh, China just does whatever they feel like. No, Bitcoin's not even banned in China. China bans a lot of things, have not banned Bitcoin. It's hard to trade it onshore in China, but it is not
I thought
banned.
they did ban it.
Because no, Bitcoin is not banned. You can own Bitcoin as a Chinese person. They've shut down the exchanges.
You can't mine it?
You can't mine it. And as a exchange, the large exchanges no longer offer a Bitcoin renminbi trading pair. But you can still trade it OTC and you can still own it because, Chinese government's smart. They know if I ban something, then Chinese people will find it valuable because the government told me I can't do it. Now, that is why if, the government and the elites want to stay in sort of this financial position, the ETF is the best thing that they can do because people believe that they've achieved financial freedom when they actually have just handed over fees to the same people who have been fucking them for the past 80 years anyways. So that is the smart thing to do. But ultimately, I think that attitude is very defeatist. If you do believe that a government is a representative body of the will of the people, and you just default to saying that it can never change because the elites in charge want it to stay that way, well, then nothing will ever change. And that's a big detriment, the writing argument that a lot of people give, whether they're a boomer or somebody who's much younger, is, oh, Bitcoin is really good. I understand, like, decentralized money, sound money, inflation resistant, blah, blah, blah. Great. But the elites want to let it happen. So I'm not going to own Bitcoin because the people in power are threatening and they're not going to let it survive. Well, fuck that. Buy some Bitcoin. Tell your friend to buy some Bitcoin. Shut up from the rooftops. Create a movement. Be part of it. Try to change things. So I think that's a very defeatist attitude. And if that's the attitude that everyone wants to have, then you deserve to be a fucking debt serf.
What do you really think? Come on, Arthur, say something strong. Come on, man, stop with this wishy-washy bullshit. Yeah, that's very on point, I think. I maybe have a little more empathy for, Here's what I really think. I think nuanced ideas are extremely difficult. I think the government is extremely powerful. Staring down the barrel of the government and deciding that you're going to stand up to them, I just do not fault the average person for not being willing to do that. So I have deep empathy for people who either A, don't understand it, don't want to spend their time wrapping their head around it, or if they do believe, as I quite frankly do, that at some point, and honestly, the ETFs maybe give me a little bit of comfort because I'm like, okay, that gives them a way, that and other centralized exchanges like Coinbase give them a way to grab it, to do a thing with it, right? To feel like they have control. And then people that are sort of, hey, I would at least like to hedge my bets. You know, when you think about the Second Amendment, not to get into this debate, but when you think about the idea behind that was, hey, the government may go tyrannical at some point, and you may need to be able to defend yourself. That, I think people lose sight of that, and they think that, oh, a gun is, you know, for a home invasion or whatever. Sure, that too, yes. But like the original intention was the government may turn on you and you need to be able to protect yourself. And that America, anyway, was set up with that in mind. Like, we're putting all these balances of power because governments tend towards tyranny. And so you need a way to protect. So anyway, that having Bitcoin is a bit like the financial equivalent of the Second Amendment. I have the right to maintain my own money. I have the right to control it. I don't have to. I can keep it in a centralized system because, good Lord, it is so easy to lose your crypto if you are not very careful, clicking on an errant link, forgetting your seed phrase. I mean, just woof. It does make me tense on that side as well. But at least I know that I have the right. It's interesting, and I thank you for letting me think through this stuff in real time. But that is why I find myself so drawn to this is, okay, we have a broken system that is an affront to human dignity, using your words, because of the way that it can be inflated. I think the memes law says that you should just be able to tell somebody, save your money and you're going to be fine. I know that we don't necessarily agree on that, but that feels really true to me, that should just be a right, that no one should be able to take your money and spread it across everybody else. I have a feeling that's going to be one of the more controversial things that I say today. Just trying to predict the comments. But so you start putting that together and you give me the Second Amendment of financials, and now I can take custody of my own money. I don't think it's unseizable. I think maybe I'm against the Bitcoin tide on that. I think the government can wrench attack you with cruise missiles.
The hammer attack is the low tech is the hammer attack. Hammer, knee, private key. Okay, so here you go.
Yeah. I've never heard that before. That's good. That memes law right there. That one will spread. Hammer, knee, give me your key. Yeah. Facts. So what do you think about the ETFs? Like, is that a move you're like, oh man, this is amazing? Or do you think, because a lot of people are like, hey, BlackRock could end up owning so much of Bitcoin that it becomes a problem?
So I think that Bitcoin is decentralized peer-to-peer. Anyone should be able to own it. And if we've constructed the game theory and the economic incentives in the right way, we should have created a system that should be able to prevent sort of one centralized entity passively destroying the system. We're going to find out if BlackRock owns, I don't know, 20, 30% of the float of Bitcoin, and there's changes that need to be made, and you need to have the community buy-in. Could their passivity obstruct that process? I don't know. We're going to have to find out about that. But the beautiful thing about Bitcoin, which is different than gold, is that Bitcoin must move to have value, because the miners who expend energy to improve proof of work, to upkeep the system and process transactions, must have transactions to process so that they earn fees to pay for the electricity and the energy that they're expending. Versus gold is just a piece of, it's a thing. If the gold sits in a vault for the next 10,000 years, it's still gold. If no one trades another Bitcoin ever again, it falls to zero. So if we do get a centralizing force in Bitcoin that essentially hoovers up all the supply and doesn't do anything with it, then it goes to zero. That's beautiful. We have the out already. Bitcoin is worthless if you do nothing with it. If we do nothing with the tenets of peer-to-peer decentralized money, you've essentially just gone around in a circle and done nothing. And so I think that when people start to realize that we must do things for the ecosystem, we must use this currency, we must try to create a farm to table Bitcoin powered economy so that the currency moves in a circle around, humans and maybe AIs in the future, then we've done something. We've created the movement that creates the value for Bitcoin. If all we've done is stuffed it in our wallet or stuffed it in our retirement account on a BlackRock ETF, we've accomplished nothing. We have not done what Bitcoin is there to do, and therefore we will be rewarded with a fucking zero. And so I think that's absolutely beautiful. And then we can rebuild the system again. It's a common delusion that we created this computer game called Bitcoin, and now it has economic value. We can do it again and try to rectify the mistakes that we made in the first iteration.
So do you think that Bitcoin has a fatal flaw?
No, I don't think it has a fatal flaw. I think that it's a resetting system that will respond to, if the external environment doesn't create movement, if the currency isn't moving, if it's not being used, then it should be worth nothing.
Interesting. Tell me why that's a good thing.
Because if we go back to the rentier, like just a person sitting on a government bond and doing fuck all with their life, not improving the human condition at all, but they get to enjoy the fruits of everyone else's labor by doing nothing, is that a sustainable situation? Because that is what the fiat currency system is. Accumulate a bunch of assets, sit on your ass, do nothing, and because you're rich, you're going to be fine. Or you can accumulate a lot of Bitcoin, but you better do something with it. You better invest in companies or spend your Bitcoin on services to prove that this is a currency system that should be used, or do something to increase the value of this system. Otherwise, what you've spent all your effort doing is going to amount to nothing. You don't just get to sit on your ass just because you're rich. At the extreme. Obviously, we're not at that point right now. This is a very, down the line type of thinking, taken to the extreme. But I think that Bitcoin in its design solves this issue of the rentier situation where you have a bunch of very lazy rich people who are rich because they're rich and they don't do anything else to keep them rich.
Okay. That feels weird to me. So I'm assuming when you say rentiers, you're talking about what people commonly refer to as rent seekers, which was a concept I never quite
No. I mean,
understood,
maybe it's more of like it's like a pre-French Revolutionary, like essentially you had rentiers, which was the French government bond, and it paid, I don't know, 3 or 4% coupon, whatever it was, right? And so you basically had all the nobles did fuck all. They owned all these government bonds that paid all this interest, and the government just taxed the fuck out of all the serfs and everyone working on the farmland. And so then everyone else got to build their nice chateaus and sit on their ass, right? That's what I mean by rentier. It's somebody who just earns interest. They do nothing. Great life if you're able to have it, but you're not producing any sort of productive value for the economy. And obviously that was a corrosive factor that led to part of the reason that led to the French Revolution. That's what I mean when I say rentier. It's I've got a lot of capital. I just own a security that pays me some interest, but I'm not doing anything else to contribute to society. I'm not making money essentially move. Similar to Bitcoin, if it's all just sits in an ETF, it's not moving, it's not doing anything. What have we really created? Okay, just another financial asset that's held in a portfolio. That's not why it was valuable in the first place. It was valuable in the first place because we had created a new way to move value throughout a human economy. So it must move. It must do something to be valuable, to prove that it's a peer-to-peer decentralized monetary system. If it's just sitting in a portfolio, then just own something else. But why own Bitcoin? You're not owning it for what it's there to do.
So this sounds like a contradiction of the narrative around Bitcoin being digital gold. Because what I hear you describing is Ethereum.
No. Ethereum, so I'll separate Bitcoin as money. It's a monetary system. You're able to move monetary values around. Ethereum is a decentralized computer. Now, Ethereum and Bitcoin could have, I think, competed on moneyness, if not for the 2016 DAO hack situation. So for those of you who don't know what happened, there's a company called Slockit Stephen Toole, and he wanted to basically do a big raise of money for his an IoT protocol called Slockit. So he said, why don't I create the first decentralized VC firm where everybody could put in Ethereum into this fund, and then people would get these governance tokens, the DAO, Decentralized Autonomous Organization, the DAO token, and they could vote on projects. Guess what the first project was? Slockit, his company. And so the DAO, as this innovative way to crowdfund, raised, I think at the time, 150 million US dollars worth of ETH. Now, unfortunately, the acumen of the engineers, and maybe some people say there was some foul play involved, I don't know, created a situation where somebody was able to execute the smart contract in a way that wasn't anticipated, and they were able to siphon off money from the DAO treasury. And so you had this situation where the Ethereum network, this is, I don't know what percentage of the network this was, but it was massive. This is back in 2016. Ethereum had only launched a little bit over a year prior, in 2015. So Vitalik and all of the big stakeholders in Ethereum had a problem. If we ascribe to the moneyness that blockchain, what happens on the blockchain, nothing can change. It's immutable. We should never change it because we want to be a sound cryptographic piece of money. That means that the DAO hack should be left alone. And okay, too bad that people lost, all their money on this project, which was a big percentage of the network at the time. We're going to be money. Money says you can't ever change, just like Bitcoin, immutable. There is no changing. You send Bitcoin to the wrong place, sorry, that's it. The community and Vitalik and some of the other people thought, no, we want to be the decentralized computer. And to forward this vision of being a decentralized computer, we need it to be usable. We need to have this network continue. And therefore, we're going to advocate for a hard fork that rolls back the network to a time before the DAO hack was created, fix this issue so that everybody gets to keep their money, right? And this is what happened. They chose, let's be a better decentralized computer and get more users on board and give them a redo, versus being the hardest money ever known, which is Bitcoin. And obviously the community voted in favor of this because there was two currencies created, Ethereum under the symbol ETH and Ethereum Classic under the symbol ETC. Look at the price of the two. Ethereum is, what, I don't know, what is it now? 4,000, whatever it is. ETC is maybe a few $100. If that, I don't even know if it still exists. So the community voted, we don't want money. We've got Bitcoin. Bitcoin's money. We want a decentralized computer. Be the best decentralized computer you can ever be, Ethereum. And that's what they've done. So I know lots of people in crypto will disagree with me on this, but that is how my mind works on the difference between Bitcoin and Ethereum, and predicated on this pivotal event in 2016.
Then if I'm understanding you correctly, Bitcoin, you believe anybody holding Bitcoin, if they want to really make this a thing, they're going to have to build on that network and be able to buy a cup of coffee with Bitcoin.
Or do something. Maybe it's not a cup of coffee. Maybe it's, I'm going to settle sovereign nations trade flows in Bitcoin, whatever. It just needs to be used for something. It just can't just sit in an address and do nothing for the next thousands of years. No, obviously you can do that right now because it's only 15 years old. We're talking about a very long tail situation, not something that's going to happen anytime soon. It's more of a philosophical discussion of what you think Bitcoin should be doing in the next 100 or 200 years.
Yeah, you said earlier that we could reset the system and solve the flaws that we built into it. So I'm having a hard, because when you describe that, that sounds like a flaw to me. As somebody who really likes the idea of Bitcoin as digital gold, I have admittedly had in the distant recesses of my mind that question of, well, what happens when the last block reward is given and that's it? All 21 million Bitcoin are now out there. And I know that that's, decades away, but that was sort of in the back of my mind. Now, it feels like a flaw to me that you would need, like, hey, I need somebody to do something with gold to make sure that we can keep it as gold. Like, I want gold to just be the thing that we all agree has properties. I don't buy Peter Schiff's argument that the thing that makes gold valuable is its utility in jewelry and whatever. I think that the reason that people like it for jewelry is that they believe it's a quote unquote precious metal. And if they didn't believe it was, because I can make something look like gold, but if you then believe it isn't actually gold, then you're bumming out. So the only thing that really makes that cool is that it's rare. And that we all agree, oh, it's a rare thing that we all agree has utility. Okay, cool. So that's going to be the thing that so many cultures over time have gravitated to and said, this is the thing that stores money better than seashells, as an example, or glass beads, whatever. It's just super hard to fake in a way that like diamonds are easy to fake, at least now. Gold is very hard to fake. Gold is scarce. Cool. We're going to use gold. Okay. Bitcoin to me, that narrative, like I'm here for that. But when I think about, oh, hey, TikTok, y'all better find a reason for this to exist. Otherwise, the miners, now miners, but in the future, they won't be miners. They need to have a way to generate funds to pay for the electricity, as you said, to secure the network. That feels like a ticking time bomb.
Well, it's a very important, subtle, fundamental difference between Bitcoin and gold. Gold is a financial asset. It's not a monetary network. Bitcoin is a monetary network plus a financial asset. So what is the monetary network of gold? People walking. So what did I do before I had any way? How do I transport my gold somewhere else? I got off my ass, I picked up my gold coin, I walked over there and I did something with it. The monetary network is me, a human being, eating, getting calories, doing something, right? Or I set it in a horse and carriage, or now I have a Brinks truck, right? That's the monetary network of gold. And the asset is gold. They're two different things. Whereas Bitcoin is a network and a monetary asset in the same thing. Bitcoin has value because it was created through this monetary network. If the monetary network doesn't have activity, it's not worth anything. Therefore, just like Bitcoin, the monetary network must do something or it has no value. And therefore, the currency, its native currency, has no value either if it doesn't do anything. So that's what people get mixed up when they think about gold versus Bitcoin. Yes, it's a very simple analogy, digital gold, but when you actually think about what is gold and what is Bitcoin at a very first principles basis, they're different in a very fundamental and subtle way.
Yep, that is clear, man. It is crazy how no matter how much I learn about all this stuff, as the island of my knowledge grows, so grows the shore of my ignorance. It is, it's unbelievable. So is Saylor out of his mind? Is he playing a
He is a
short-term
genius.
game? Okay,
He's a
tell me more.
genius.
So if there's the looming, like we have to find something to do with this, he is betting everything on the fact that we will figure out something, because that man is leveraged.
So guess what? So Saylor is doing a very smart trade, which is he's borrowing money in a depreciating asset at a low rate because he has a corporate entity that's able to access this market. So if you're a listed company in the US or elsewhere, you're able to access the corporate bond market and you're able to borrow at a very, very attractive rate. So he's able to borrow US dollars. We know that US dollars, the quantity of them, will increase in the future. What does he take this depreciating asset and does with it? He buys Bitcoin. So he's short dollar, long Bitcoin. Short the thing that's going to increase infinitely, long the thing that only can have a certain amount. So from a corporate finance perspective, it's a expected value positive trade because the asset his funding currency is going to inflate. The thing he's buying is going to have a finite amount. And so, I don't know what he pays on his debt, like 2 or 3%. He has a other, software business on top. So the interest costs of his debt is either partially or in full covered by the income he earns from his software business. So he basically has created almost a free option, or an option with a very, very low carry on the future value of Bitcoin. So what does he do? Prior to the ETF, he had two value drivers for his company. Anyone who wanted to buy Bitcoin from a traditional TradFi basis couldn't, because they didn't have a vehicle to do it. But anyone in TradFi can buy a listed US security, which is what Microstrategy is. So if his company is just a Bitcoin option play and you want to buy Bitcoin, you buy MicroStrategy, and you don't give a fuck what he does because he's the only game in town for this strategy. Okay, now it's a bit different with the ETF, but the ETF now powers a second leg of his strategy, which is Bitcoin number go up. Okay, well, if there's only so much Bitcoin that's freely tradable, because a lot of it's held in wallets or lost or hasn't been mined yet, whatever, and now you have this juggernaut, BlackRock, Fidelity, and all these people who are buying, I don't know how many billions they've bought of Bitcoin in the last 8 weeks or so. That makes the fiat number of what Bitcoin is worth go up. And he's a corporation. He cares about his fiat value because that is what his reporting currency is. Now, so before he got the value of, I'm going to get inflows into my company because they want to own a Bitcoin proxy, but now they have another Bitcoin proxy called an ETF, I get number go up on the other side, and this option becomes very, very valuable. And so again, genius.
Okay, let's look at it from a slightly different angle for a second. So time horizons matter a lot. So maybe this won't matter at all because he's got enough time to figure that out. The narrative last cycle on Bitcoin was digital gold. The narrative this cycle, or the meme, I should say, the meme this cycle is never sell. Now, hearing what you're saying, that does not make sense to me at all. So it becomes keep an eye on whether this actually becomes a functioning network for something other than just storing wealth, that if you see that it's not going anywhere positive, then you better get the hell out while the getting is good. That is a far less compelling argument. So the only thing, and because again, I like to try to predict the comments to see my own argument from the outside, which is why I do that. Seeing that argument from the outside, people are going to say that's ridiculous. Of course, we will come up with something. You're 15 years in. Do you think that there's anything meaningful other than Bitcoin as a awesome narrative, as it being a store of wealth? Is there anything Lightning Network or otherwise?
So if you're not familiar with ordinals, they are
NFTs on Bitcoin.
NFTs on Bitcoin, but not really. We can get into the reason why people are really interested in that. But if the meme is simple, NFTs on Bitcoin. So what are we doing? We're bringing human culture, and I think NFTs as a data construct bring human culture to crypto. So we're going to bring human culture to the biggest and most valuable crypto of them all, Bitcoin. And ordinals have already proven that they've generated massive amounts of transaction fees for the miners as people are inscribing them and trading them with each other. And this is only going to increase. So I think we have found one killer transaction generating method, which is let's bring culture to Bitcoin. People like to trade these things. Now you can trade an ordinal on Bitcoin versus, a punk on Ethereum or whatever, right? So we have proven that we have done something. Someone's come up with some innovative ways to use the Taproot technology to inscribe these ordinals and create this demand for culture on Bitcoin, and that's generating massive amounts of transaction fees that are going to miners to keep them fed. So again, we've done something in the short term, but I would push back on this notion of like in markets, I operate in sort of like 2 to 3 year cycles. And so obviously what goes up comes down. It's not that Bitcoin's not going to experience another 75, 90% fall from whatever the all-time high is this cycle. But right now, the narrative is never sell. Do you want to go short against that narrative? Absolutely fucking not. If you don't believe in the narrative, just don't enter at all. But do not go short because you're going to get blown the fuck up. As somebody just found out, shorting MicroStrategy stock on some sort of like an arbitrage trade between MicroStrategy and Bitcoin, because the implied Bitcoin price of MicroStrategy is higher than what the spot price of Bitcoin is. And so people went long Bitcoin, short MicroStrategy, and the premium is gapping and forcing people out of their positions. So Saylor is a meme god right now. He's got the hold.
I'm one of his memes. I'm well aware. Yeah. How many chairs am I sitting on? Yes. Oh,
he's got the narrative. Do not short him. If you don't believe in what he's saying and you think it's complete bullshit, just don't own the stock. Don't short the stock. Don't do anything with it, but don't go short.
Very interesting. Yeah, look, needless to say, am a huge believer in Bitcoin. It is I like to know what is true. That is always my guiding force. If ordinals actually solve the problem, we'll see, because I think there's now going to be maybe just multiple communities will spring up, but right now you've got NFTs. I would assume from a trading volume position is just absolutely orders of magnitude larger than ordinals. I don't know that, so maybe I'm wrong and the problem's already solved. But that's my gut instinct. Is that true?
I don't know. I would assume that trading volume on like ERC20 NFTs is definitely higher than ordinals. There's not even major wallets yet that support it. Obviously, I mean, I've invested in one, but yeah, it's a nascent space. But we've proven that there is demand for block space that isn't just let me just move some Bitcoin between my Coinbase and Binance account, right? So I think that's the thing that I want to see. Not that we've solved the problem of how do we keep the miners incentivized with transaction fees to keep their machines on in 2140 when the Bitcoin block reward ends. It's okay. We all know this problem is coming. There are different communities sprouting up, creating intrinsic demand for block space on the Bitcoin blockchain. If we can do it with ordinals, what will be the next thing that the community comes up with? I don't know. But to say that you're going to not participate in this bull market because of something that's going to happen in 2140, okay, fine. But then, yeah, sit it out. But that's probably, if you're thinking about it from an investment or trading perspective, that's probably not the right way to look at things.
When it comes to personal health, I am a huge proponent of using any technology that you can get your hands on to inform and empower you to make better decisions so you can reach your peak performance. And that's why I am pumped to introduce you to Lumen, an amazing new tool that can help you increase your energy levels, feel better, lose weight, maintain healthy weight, and much more. Lumen is the world's first handheld device that measures your metabolism through your breath. And after analyzing your breath, the app is going to give you tailored guidance and tips to help you overall improve your metabolic flexibility. Lumen is validated by peer-reviewed scientific research, and their recommendations are personalized to your measurements so you know you're doing what's best for your individual body. When you use Lumen, it's easier than ever to stay on top of your health game. So if you want to take the next step in improving your health, go to go.lumen.me/impact, or just click the link below and you'll get $50 off your Lumen.
What is the right way? So, yeah, we'll just ask that. What is the right way?
If you're somebody who is very, into markets and you like to manage your money, and this is something that you enjoy doing, which obviously this is what I do for a living, momentum trades, especially in such a meme culture like crypto, where there's no manipulation from outside TradFi forces, the trend is your friend until it ain't. We're not at that point yet where it ain't. So you follow the trend. And I think it becomes obvious to you in sort of absurd moments of why the trend is probably time to fade the trend. Like there are multiple opportunities for people to get off the train in 2021 and early 2022. Some people did, a lot of people didn't. But you just have to understand what you're doing and understand that nothing goes up forever. Nothing goes up in a straight line. There are ups and downs. And at a certain point, then there will be a correction. But be ready for it.
Okay, before I ask my next question, I really want to prime people. So I started doing financial content for one reason and one reason only. When COVID hit, I didn't understand money printing. So I was really worried about, so my background, I don't know how much you know about it, but I used to work in the inner cities. So I have seen a lot of people up close that are in the grips of poverty. And I was like, they're going to get destroyed by what's happening now. They're living paycheck to paycheck. Businesses are going to be closing down. They're going to lose jobs. Like this is really going to be a bloodbath. And so I wanted to start making content around how I thought they could approach it just on a day-to-day level. What should they do? So the basic stuff, get your spending under control, invest in an index fund. Like don't try to be clever. Don't try to time the market. Don't be a trader. Just like get your money into an index fund. There's a guy named Wall Street Trapper who I think is brilliant at speaking to people that don't have a financial mindset, that did not grow up with that. And he was really helping them migrate into think like an owner, make sure you own equities. If you're going to wear Louis Vuitton, own Louis Vuitton stock, right? So it was just really, that's really what started getting me into this. And then as you ask more questions, you know, as the island of your knowledge grows, so grows the shore of your ignorance. I just started realizing, oh wait, like I don't understand this part. I don't understand that part. And so you finally end up at Robert Breedlove and what is money? And then it all starts to unravel. And then I was like, wait a second, the thing that I was trying to protect people from, it's a totally different game. And this is terrifying. So we're about to go into a part of this game, trading, looking at trends, riding waves, looking for signs to get off the train, all of that. But I want to say, because I just really believe that the vast majority of people should have a long-term horizon, that they should buy something and not mess with it. Like for instance, I'm very heavy in Bitcoin. Bitcoin and Ethereum are just by far my two biggest positions in anything. I own some gold, I own stocks, but other than maybe treasuries, I'm just not in anything like I'm in Bitcoin and Ethereum. I didn't sell anything during the bear market. I was like, my thesis is still true. Tomorrow's going to be more digital than today. Therefore, I believe that money is just going to get more and more digital, meaning more and more people will rely on cryptocurrency, just to say it in this most blunt way possible. So I'm like, as long as I believe that to be true, I will certainly ride this out. Now, I also have markers where I'm like, yeah, I would, because I know that we're probably still in a cyclical, or I should say, because I believe that we are still in a cyclical cycle. I don't think we're in what people call the super cycle and it's only going to go up and it's then going to stabilize from here. Probably going to retrench would be my guess. So if I miss out on some upside, whatever it is, what it is. So I have certain triggers where I'm like, if it hits this number, I will sell some of it. I would never sell all of it, but just taking some of my profits. Okay. So with all of that, highly encouraging people to be very thoughtful. And this is something you and I talked about last time. The reason the cliche of buy low, sell high is so oft repeated that it is a cliche is because people actually do the exact opposite. If you can hear my voice right now, the odds that you buy high and sell low border on 100% because it's so hard, man. It gets so exciting. And even my dad, like a month ago, he was pressuring me to help him like get his Coinbase account going so that he could start selling his Bitcoin because it was like starting to rise. But then it started rising so much, he texted me back and he's like, actually, I don't want to sell right now. I want to hold. And I was like, Dad, you need to pick a number. What is that number where you'd be mortified that it hit and you didn't sell? Don't get sucked in. Okay, that's a long preamble, but I feel extremely, to be true to myself and my mission, I had to say that. All right. What are the signs that people should be looking for in this bull run to know whether it's time to get off the train or to keep adding more?
There's no like one thing, right? So if you think about the last cycle, what was it? So FTX, this company came out of nowhere, Sam Bankman-Fried, you know, wonder kid of the world. As I said in my essay, the right kind of white boy, just crushing it. He put his company logo on a stadium in Miami for $135 million. I don't know how much he paid the Major League Baseball Association in the US, the FTX logo on all the umpire outfits in the United States. And too, that's interesting that this company that didn't exist, 2 years ago is buying all these things. What does that say about the business that this person is in? And this is obviously in late 2021. And you probably would have thought that was extremely strange that this kid that you never heard of within a year and a half was able to start buying all these sports teams, logos, hanging out with politicians, blah, blah, blah. Maybe something's a bit overvalued. Now, what really got me sort of bearish, and I wrote about this at the time, probably in December of 2021. Obviously, I'm a big macro investor, consumer of research. I spend probably a few $100,000 a year on various research publications. And there's a person that I really respect. His name is Felix Zulauf. I like to call him my macro daddy. He's an older Swiss dude who used to run the large trading desk at UBS. And he has a research outfit. And he's very attuned to credit cycles, and credit cycles being the amount of money and what's the rate of change. Is momentum accelerating or decelerating? Now, obviously, if momentum of money
I don't understand
creation,
that. Rate of change what?
So the momentum, as in like how fast is something changing? So
In
is it the
credit?
second derivative? Yeah, the creation, how much credit is in the world, right? How much fiat is there floating around? So traditionally, you look at, US dollar, euro, Chinese yuan, Japanese yen. Focus on those four economies, you basically have the entire world economy. How much of those countries, central banks and governments creating of credit money? Is that accelerating or decelerating? Now, ever since COVID, that had been accelerating as different governments, and the US being the biggest, had certain COVID stimulus measures, right? And so the amount of money that was gushing into the world was probably larger than since World War II. And so obviously crypto and everything else just zoomed higher. Starting in late 2021, as inflation started to show up, that momentum started to roll over. And so I remember I was sitting in my apartment, I forgot where I was, and I read one of his reports in December. And I pieced that together with all this ridiculousness that of FTX paying all this money for these sports sponsorships. And I was like, this doesn't look right. Time to get off the train. And so over the next 2 days, I dumped my entire portfolio except for essentially Bitcoin and Ethereum, entire crypto portfolio. And then I wrote a massive essay about why I was going, why I sold all my stuff. Now, did I top tick the market? No, I think top tick of market was like November 2021. I probably finished selling in end of December of 2021. But that is sort of the mental process. Is there obscene things going on in crypto, and are they out of whack with sort of like the macro narrative? And I'm really focused on how much fiat liquidity there is there in the world, because to forecast how useful the technology is from a fundamental basis is just very, very difficult. I think a lot of the returns are usually driven by fiat debasement rather than Bitcoin or Ethereum or any of these other cryptos are massive networks, because to be fair, there's only a few million people, if that, who use these things right now for anything other than just, I don't know, sending money between their different exchange accounts. So that's sort of my mental worldview. Now, that was 2021. What does this cycle look like? I think this cycle is a cycle where we break the sovereign debt markets, where every single major country finally admits that we will do anything it takes to make sure that the government does not go bankrupt. And so we're going to remove all this pretense about caring about sound money, and we're just going to start printing money like it's going out of style. And so I think this cycle is going to be a bit different than the last cycle, where the Fed and then every other central bank said, oh, we've overdone it. Let's try to reduce it. They tried, but the governments are still printing money because they need to get reelected. And we're in an inflationary environment. There's too many old people. Everyone's going to go to war at some point. So everyone's beefing up on defense. And so the central banks have come back in and said, okay, we got to print money, but we can't really call it quantitative easing or the things that we called it before. So we'll make up new names for it. But it's the same thing. And so we want to protect the government bond market and make sure the government can continue to borrow at below the economic growth that they're creating. And so I think right now we're in this cycle where people are realizing this, and you have the professional investor class are also realizing it because they've had the worst bond performance, at least in the United States, since the War of 1812. Over the last 3 years, U.S. Treasuries, 30-year Treasury is down 50% on a real basis. That is the worst return since 1812. Now, you wouldn't know that by listening to the financial press, but bond investors are getting absolutely eviscerated. And as they come to the realization that this is not good, maybe we should own something else. That's sort of this secular rise and sort of Bitcoin. So I don't think it's going to be a similar type of credit event that's going to cause prick the bubble and crypto and everything else that happened in 2021. But there's going to be some change in that mindset, and that's what I'm looking for. And there's no real one thing you can point to. It's kind of just be cognizant of the fact of, why do you think the market's going up? Is there something that's happening that's challenging that worldview?
I really want to push you on this. This is very interesting. Okay, so you said a lot of things in that. So I just want to cycle through recap what you just said, make sure I understand it, and then I'm going to see if we can start prognosticating about some of the things that might be the signs this time. Okay, so in 21, we were at a point where, for people inside the know of crypto, yeah, sure, everybody knew about it. But something happened in 2017 during that bull run where it really started to, like, I was starting to hear about it. They were making documentaries about it. And at the time, I was not somebody that paid attention to finance at all, dude. I could not have been more heads down building businesses. But I was still hearing about it. Like, it sort of cracked that first thing. And then it just disappeared. Now, I didn't realize there was a retrenchment. I wasn't paying attention like that. But people just stopped talking about it. Then obviously, I think it was in 2020, it starts really popping off again. And then in 2021, it's insane. So, okay, now we have, if I had to boil down what you were looking at in that moment, the rate of adoption, speed to awareness, however you want to think about that, was just way outpacing what you would expect to happen from a this isn't euphoria perspective. And in fact, that's a marker I want to put on the table right now, this euphoria. I'd never felt it before. Cultural euphoria. Obviously, I'd felt it in my own life, but cultural euphoria is a very different thing. And man, I now know it when I see it. And so that starts really popping off. Okay, so the rate of growth of, just to use FTX as an example, was just too much. Okay, so question number one. The second thing that you look for is the momentum in the credit market, credit liquidity being the same thing. It's money printing. So the governments are pouring artificial money into the system. Those two things in 21, they gave you the signals that, okay, we've got heavy euphoria. Things are moving too quickly in terms of rate of adoption. And the very thing that crypto is a response to, inflation of the money supply, has slowed. Time to get out. Makes perfect sense. Now, as we go into this next cycle, you've said something multiple times in this interview, and sometimes you say it very casually, as you just did, which is everyone's going to be going to war soon, so they're building up their military. Hold on. That's a very big statement. So is that going to be part of what you're looking at? Because one of my employees here was doing his breakdown of what he's going to look for, what his selling signs are. And very similar to what you just broke down for 21. But I worry that he's going to get blindsided because he's looking at old signals in a new market. Do you have sort of the beginnings of an idea of what you're going to be looking for in this moment? Is it a build towards war? Is it euphoria? If it's not credit, like what is on your mind?
Well, I think that we're going to get some sort of credit event in the government bond markets. And then we're going to see how
you thought they
crypto
were just going
respond.
to print?
Yeah, they're going to print. And I think some people are going to try to exert an influence of saying, hey, these bond markets, they still matter. We're not going to buy a treasury at 4% when nominal growth is at 6% or whatever it is, right? And there will be an event, and there will be a way, an off ramp to say, okay, we want to reform the system or change something, and we'll see what the authorities decide to do. I think they're just going to keep printing more money, and we keep going higher.
Can you say more about that, please?
If we think back to the stats I just said, so the bond market as of we want to think about really when this bull market started to gain a lot of steam was October of last year. So essentially what happened, and I'm going to focus on the U.S. Treasury market because that's the most important one globally, and every other market sort of depends on that from a government bond perspective. You have this thing where interest rates on the debt was rising, but at the long end, it was rising faster. So post the September Fed meeting, the spread between the 10-year bond and the 2-year bond was increasing, meaning the 10-year yield was rising faster than the 2-year yield. And in general, both are right. The yields are both rising at the same time, which is basically called a bear steepener in fixed income trading terms. And that is deadly for banks and the entire financial system, because the entire financial system is modeled post sort of 1970s, 80s on this assumption that when back-end interest rates rise too quickly, that the authorities will come in and print money to save the system. Now, they did do it, so the market got it right. But in the meantime, all these financial institutions, in the way that their complex financial derivatives are structured, ignore this particular quadrant of the potential outcomes and thus have massive losses. And this is what we were seeing across the banking system. So if you looked at the, regional bank stock index or KBW index, which is all US banks, they're getting crushed going into late October of last year. And so what happened? The U.S. Treasury and Janet Yellen, she said, "Okay, I'm going to stave this market. I'm going to issue a bunch of short-term debt and take money out of the reverse repo program at the Fed, which is just this $2 trillion facility of cash just sitting there that's outside of the financial system." And she offered a higher rate on short-term Treasury bills to entice this money out, and which reflates the system, gives more credit money into the system, and that sort of helped fuel this bull run that started essentially on November 1st of 2023. So we're going to get another event like that, because if the Fed, the Treasury, and their other global central banks and fiscal governments, if they continue to do what they're doing, but say that on the one hand, we want to try to fight inflation by not printing money, we're going to get another situation like we got in the third quarter of last year, where the bond market says, hold on a second, what do you want to do? Do you want to safeguard the value of fiat currency, or do you want to make sure that the government is funded? And I don't know when that situation is going to happen. There's lots of tricks that they can pull, probably a little bit too mundane for this particular venue, if you really want to get into US money markets. But there's going to be another situation like that. And you could see a general, risk off, meaning financial assets decline on that situation, on the fear that maybe this time they're not going to save the banks and print the money and, reflate the system. I don't think that's going to happen. I think they'll do the same thing they've done every single other time. But you could get a situation like that. But if I have to really think about what could stop this particular bull market, it's going to be something about the belief of institutions buying Bitcoin. So what's the narrative right now? You never sell, because the institutions like BlackRock and Fidelity, they have to buy all this Bitcoin because there's all this pent up demand from institutions who want to incorporate Bitcoin into their portfolios. And there's all these diamond hands out there who aren't going to sell their Bitcoin. So there's a very low supply of Bitcoin left to sell, which means the price goes asymptotic on the upside. Now, obviously, that can be true for a while, but it won't be true forever. And so at the point in time where we start to see a massive leveling off of the allocations of money into these products, then that narrative starts to shift, and people can become less confident that there will be, a few $100 million of buying of Bitcoin every day from all these major ETF fund managers. And I think that might be the thing that I'll be looking for, which says, okay, whatever the price of Bitcoin is at that point, maybe it's time that I think about, at least for the other non-Bitcoin and Ethereum assets, getting out of all of those, right? And I have a very big venture capital portfolio of early stage crypto tokens that will need to be liquidated. And then on a more philosophical level, I have to think about, well, if Bitcoin has risen to such a high level relative to the energy that it represents, maybe I should own a power plant or a massive stake in ExxonMobil or something where I actually own the fundamental energy source and I got it at a very cheap price relative to the price of Bitcoin. And that's a way that I can take some chips off the table in Bitcoin terms. But what I probably won't be doing is selling Bitcoin or Ethereum for fiat, because I still think that the fiat system is fucked and I don't want to participate in that. But primary energy, if I can own those resources at a very attractive price because Bitcoin and Ethereum and these other assets have been bid up to such an insane level, then that's probably something I should be doing.
Okay, so to recap, the thing that I found really intriguing, because I've not heard this idea before, is that there's going to be an incident in the bond market. Now, what I took that to mean is that something is going to happen that will make the biggest buyers of bonds step back and say, we're not going to buy bonds anymore. And now the US government is in a really dark place. And I think it was you that said, Powell is just out there flexing. The person who's actually in control is Janet Yellen, because the Treasury
Correct.
can ultimately just tell them what to do. And because I think it was Powell that said, like, we can't keep doing this. We can't just keep printing.
Yeah, he says it, but he has no power. He can't tell the federal government what to spend his money on. He's just, the central bank.
Yeah, it's interesting you say it like that. So am I right? Is that what you're saying? That people will say and enact, we are not going to keep buying bonds because your fiscal policy is irresponsible and it's causing strangeness in the bond market that makes it problematic for the reasons that you explained earlier. And that is, I mean, that's catastrophe for the Treasury, if I'm understanding this right.
Exactly. Their number one job is to make sure that Janet Yellen's job is to fund the president and whatever he or she would like to do, right? If Biden wants to spend
Through
10
bonds.
trillion through bonds. So she must have a well-functioning US Treasury market, and she will do whatever she can to make sure that is the case. And so if it means changing the rules on the fly, or if it means co-opting the central bank to do what she needs to do, she will do that, or whoever is in her seat if he leaves after the Biden administration. So that's that person's job, and they will do that. And so when this really bad thing happens in the bond market, then we get to the final stage of essentially the sovereign bond bubble, which is, okay, let's stop fucking around. We will print money in whatever quantity is needed to keep the 10-year bond rate at X, whatever that is, right? They'll go full Japan. That's the end game. Then we get Bitcoin, 1 million, 10 million, or whatever. And then it's okay. At some point we get off the train and like, okay, well, Bitcoin's great. It's gone to this insane value because they printed all this money. Is there a real asset, real energy producing asset that we should own that is more essential than Bitcoin? And I've gotten it at a great price because of how high Bitcoin has been bid to. Again, it's more of a theoretical, philosophical thing of, is there something else to buy when you want to sell Bitcoin that's not fiat?
Well, that's the second part. So there's two things you said that I think are really interesting. One is what happens. The second one is how you respond. Okay, so the what happens scenario, I was actually misunderstanding it. So I'm glad that you clarified. So what's really happening is the bad thing happens in the bond market that pisses the bond purchasers off. They stamp their feet and say, hey, you need to calm the bond market down, which they're going to do by saying, we got you. We're going to print money until the end of time. Don't worry. We're going to maintain the price that you need to not end up being underwater. That is going to cause a massive run into cryptocurrency. And that's going to create that just hyper euphoria potentially. Obviously, I know this is just I've asked for the thing that's in the back of your mind. This isn't the thesis you're operating on right now, but that could potentially cause a massive run into crypto, which creates that euphoria that I was talking about, drives the price up. The numbers you threw out, 1 million, 10 million, whatever. I know those are sort of the fantasy numbers that you hear people in crypto circles throwing out as the end game. But if it makes that kind of run, you're like, okay, now's probably a time where I go, all the big wins have been had. I mean, this is just like Warren Buffett said, all the eye-popping wins of Berkshire Hathaway are in the rearview mirror. Like, you're not going to get that anymore because I'm having a hard time finding a place to put this money. So you know that isn't going to be, we're now getting into the zone I was talking about earlier where Bitcoin just becomes sort of boring. It just chops side to side for the next 2 decades. And that's when you start looking for, in the example that you gave, the underlying energy producing asset that you can be in once you've taken sort of the max out of the value, the volatile value of crypto.
It's a put option on government bond market. And so I think we're at the point where the largest government bond market admits that we can't afford this, so we're just going to print the money anyways. And that's the option that you're really trading on Bitcoin. You want to be around for that, because that's going to be, and if it happens this cycle, it's going to be absolutely insane. And so that's when I'm running an essay right now, and the tenet of the essay is people don't have enough imagination about how ridiculous this bull market can get. So if we combine the Bitcoin is now available from a financial perspective to be ingested into TradFi portfolios, and you have TradFi portfolios do not want to own bonds because everybody knows that this is what's going to happen in the treasury market and JGB market, ECB's bonds, China bonds, all the different bond markets. If these confluence of factors, this is the situation where the 40% of managed money that's in fixed income or basically sovereign bonds globally, a portion of that goes into crypto. And so you have a massive amount of fiat that can only go through a very, very small door. You just get insane price appreciation across the whole space. I don't think people appreciate that right now. They're like, oh, is Bitcoin at 70,000? Maybe I should take some off the table. No, you fucking shouldn't. This is a time, if this is the narrative that you were operating under when Bitcoin was 16,000, we haven't even gotten to that point yet. We've just started. This is just like the amuse-bouche. It's not even the fucking entree yet. So we're just getting started in this thesis of the collapse in terms of, we have this one asset that's real. We have this whole fugazi financial system. For the first time in history, we have an ability to express a put option on these bonds in an easy digital fashion versus, going out and holding a vault of gold, which is quite difficult. So that is the insane bull market thesis that I've been operating under. We're marching towards that. I don't want to be underallocated if I'm right. If I'm wrong, we get, maybe Bitcoin goes to 100,000, 200,000, whatever it is. And okay, cool. Made a good chunk of money. We'll prepare for the next cycle because it's coming. If it's not in the 2025, 2027 timeframe, it'll be when there's the global world war of the, end of the decade or a little bit after, as we've come to this situation where every government's printing money because they're going to war with each other. So that's the trade. It only is going to happen once. He's got to be around for it.
Okay. So that is for anybody that's holding Bitcoin, that is certainly the fantasy scenario. Do you see going to 100K in this cycle as an inevitability, or do you see something that could derail us from that now?
I think it's an inevitability, and because now we have the banking system, at least in the West, and obviously there'll be ETFs in China and in UK, China being Hong Kong and Europe as well. So you have TradFi now has skin in the game. And this is amazing. We have had the fastest growth in assets in these products of any ETF ever. And so BlackRock, largest asset manager in the world, this is their best selling product so far, right? Trading billions of dollars a day. They're getting ingested $100 million a day of inflows. They're charging fees on that. Fidelity, all these other asset managers crushing it, right? But you have all these institutions, the sell side financial institutions, who depend on the fee that BlackRock pays them to access the markets. So if you think that you're a trading desk and a JP Morgan, a Citibank, a Goldman Sachs, Morgan Stanley, blah, 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 you're like, fuck yeah, I love crypto. BlackRock has a price insensitive buyer, all these people allocating. They need to buy and sell Bitcoin every single day to manage their fund. There are people doing arbitrage trades who now need to interact with me on a TradFi basis to trade these assets. If there's an Ethereum ETF or some of the other altcoin ETFs that these funds want to launch, great. More fees, more times for me that I have to do things for these large asset managers. And it's volatile. There's buying and there's selling. There's opaque markets. People don't know what the price of these things should be. As a sell-side investment bank, you're like, this is fucking amazing. And so they aren't going to stop with Bitcoin. I think I read some tweet today that some lawmakers in America, or Democratic lawmakers, are saying, petitioning Gensler to say, don't allow the Ethereum ETF. Now, maybe that would have been a very convincing argument if the banks didn't have a skin in the game, but banks run governments. The TradFi banking system in the US runs the US government. And now they have a stake in let's financialize crypto. Let's make as much money in fees as possible off of this amazing product that has been going gangbusters for the past 8 weeks. Fuck that. We're going to launch every single crypto we can while the going is good and earn these fees. And so I think there's just going to be more capital coming into play as you have the TradFi financial ecosystem putting on a full court marketing press to convince people why, oh, yes, look at the US government, it's unsustainable. Jamie Dimon says this about every single quarterly report. And he said, the US government's spending too much money. There will be a fiscal crisis. And now he has a way to directly profit off that, which is, oh, yeah, we have a Bitcoin ETF. Now I'm going to change my tune on Bitcoin. I'm going to safeguard the way for my clients to own Bitcoin. As long as you custody it with JP Morgan and you use a BlackRock product, it's all gravy because we're getting paid to do it. And so now you have the TradFi marketing machine out there saying it is safe to invest in crypto. Here's a product that you can do it. It's custodied by these big banks. Why wouldn't you own it? So we have interests aligned in terms of a price perspective for a very short period of time. So I think, again, we're just getting started. It's just Bitcoin. Why wouldn't you do more of it if it's so successful? An Ethereum ETF, a Solana ETF, every fucking crypto you can during the cycle. Do it. It's literally just paperwork, and watch the billions of dollars gush in. The fixed income market is however many, hundreds of trillions of dollars. Obviously, not all of that's going to go into crypto, but even a small portion of that says, I don't want to own government bonds because of all the things that we've talked about today. And now JP Morgan, my RIA is telling me that I can invest in this product and it's custodied at the bank. I don't have to worry about private keys. It fits into my investment mandate. Don't have to do any more forms. Fuck it. Let's go. I get to import this thing that is going to, on its face, solve the problem that I'm trying to escape, which is a government bond market that is not paying me what I should get paid to take on this sort of risk.
Hearing you talk, it really, there's something about the energy, the intensity around the bond market that's making me see the relationship between us, the buyers of bonds, and the government in a way that I never really thought about it. I always saw it as, this is a place for me to put my money that's safe, that I'm going to get some sort of mild return. But when you start thinking about it in terms of, hey, you're asking me to fund the government and all the things that it's doing, you better pay me a worthwhile return in order to do that. This goes back to one of the things you were saying earlier. I don't remember what triggered this thought, but the thing I really want people to be able to do is just something super simple to put their money in, to not have to think about it, to get that return. But of course, that for some people to win, somebody else is going to lose. But gets very interesting with bonds, helping fund them grow, to grow the things that they're trying to spend the money on. Very intriguing. Let me ask you, what do you think happens with ETFs when the natural volatility of crypto kicks in? Like when I think about, okay, Bitcoin, yes, volatility, super strong narrative. ETH, yes, maybe a little bit less conviction on my part for ETH, just because I think it's a harder narrative around the distributed computer. I just think it's harder for people to understand. How does that translate? Am I storing wealth in ETH? So that was a little trickier. Once you get down to like Solana, now it's like, whoa, now we're really talking narrative. You've got to be deep in that. It becomes like, do you buy into the tribe? So that feels like it's really going to have volatility, which could be amazing briefly and then really traumatic. So how do you think ETFs will respond to that level of volatility?
The banking system is saved by the central banks and the government squashing volatility and printing money to save them every time they fuck up. But at the same time, they essentially take all the fun out of markets. Nothing fucking moves anymore. Passive investing is destroying the banks because they can't earn any money because nothing moves. There's no dispersion. There's no difference between Tesla, Microsoft, and Nvidia, right? So why even invest in the stock market? Just put your money in your, in retirement account, check the box, and it just goes into, spies and Qs. So if you think about a trading floor, and obviously I have a lot of friends who work in trading, no one's getting paid like they used to because nothing's fucking moving. So now we have a new asset class And you have insane volatility. You have a fundamental appetite for a new type of financial system, and you are the gatekeeper between capital that can't exit the TradFi system and these crypto products. It's going to be amazing. You can write research reports for days. You have thousands of different things doing like different people, characters saying they're going to do this, that, and the other thing. You have so much dispersion, so much volatility, so many things to talk about. You could call your client. Maybe it's Solana today. Maybe it's, dog with hat tomorrow. Doesn't fucking matter. You have an ability as a salesperson to have a conversation with your client to solve their problem. Government bond markets aren't paying me. Hey, guess what? This week it's Solana. Next week it's ETH. Next week is Bitcoin. This happened, that happened. There's stuff going on. You have a conversation. Oh, great. Okay, I'm going to allocate here. Oh, sell this, buy that, sell this, buy that, sell this, buy that. Trading, fees, emotion, pathos. This is what markets are made of and what has been destroyed by central banks over the past, 30 years. Banks are going to love this. The trading desks are going to love this. They have a reason to call their clients now. These products are going to make them billions of dollars because we are unlocking human emotion in a form that's digestible for these TradFi institutions in a way that hasn't been available to them probably since 1997 and 2001 in the dot-com era. So that's what this is going to bring to TradFi, and they're going to fucking love it. And they're going to do whatever they can politically to make sure that there's nothing stopping these ETF fund managers from onboarding as many different crypto assets as possible now that they've gotten through the Bitcoin hurdle and they've seen how successful it is and how much money they're making from it.
Okay, so that is a really interesting picture that I have never heard anybody else say. Taking a different angle on that, it feels like an angle that has to be considered is the people that are in ETFs want the set and forget thing that you think is destroying the passive investing that you think is destroying the markets. And that when there's volatility, there is going to be an outcry to the government to protect them louder than anything you've heard in a long time. Because, when somebody's thinking about being in an ETF, it's like they're not going to the ASIC to go and buy it and figure it out themselves. So there is an amount of, I don't want to deal with it. I just want somebody else to do it. So two things are going to happen. One, volatility hits and a subset of people will freak the fuck out. And then it becomes a question of how does the government respond? I'm guessing with regulation. So that'll be interesting. And then the second thing is when you have people having a reason to call their clients, I worry that you get into the Wolf of Wall Street days of penny stocks and hyping people up and selling narrative. And there is a reason that those guys went to prison. Are you not worried about the way that people will get suckered in by con men?
Well, the con men, and let's assume that this is what happens. The con man is your JP Morgan salesperson. Is that guy going to jail? Probably not. Jamie Dimon going to go to jail for anything that happened at JP Morgan? Absolutely not. Now, again, I think that the TradFi banks will overdo it, right? They're going to pump this narrative. They're going to beat the drum as loud as they can because it's going to be soon to show. Let's see, maybe end of the year, there's going to be some banks that were probably very crypto forward, and you're going to see in their financial results, and they're going to tell the market, hey, guess what? My sales and trading operation beat expectations by some wide margin because we went hard into crypto trading and facilitating the flows related to these, whatever the suite of the ETFs are, and OTC trading and blah, 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 right? And then every other investment bank in their managing director committees were like, well, what's our response to that? We can't let XYZ bank have this desk, and we've been poo-pooing it for the last decade. Go hire a team now. We need to be this, that, and the other. That's how these banks work. It's, usually it's Goldman Sachs and JP Morgan make the money first, and then everybody else scrambles a follow and fucks it up. And so that's probably what's going to happen here. And I agree with you. Of course, the volatility is going to be insane on the upside, and things go down as much as they go up sometimes. And when the bear market starts, and maybe some of these more questionable cryptos that got put into some of these investment products go down 95%, because something happened on the network or, you know, some developer rugged them. Yes, of course, there's going to be public outcry of, oh no, my retirement account had this ETF, and I watched the commercial on CNBC, and you know that guy in the suit said this was a great investment, sir, and I put my money in, and oh shit, I lost it. Representative XYZ, you got to fuck these people because I shouldn't have been allowed to buy this product. I absolutely agree with you. And the second that we start seeing that as a movement catching steam and the bank's ability to beat back that narrative, they can't forestall that. That's probably a sign that we've reached the peak saturation of like the institutions in crypto, and whatever the price is at the time, it might be time to take things off the table. So I hadn't thought of that before, but as you say that is probably another thing I'm going to keep in the back of my mind as a signpost of, okay, has it gotten so out of hand and losses started to creep in that the bank's political power to just ram things through has been checked a bit by some outraged small mom and pop investors.
Yeah, so nothing, another thing that I said last time, but nothing is ever as good as you hope it will be, and nothing is ever as bad as you fear it will be. I have a feeling that a lot of this, like there's going to be just enough volatility in Bitcoin that it slows down the ETH ETFs. Then there's going to be enough volatility in ETH that people really stop to think, do we really want to do Solana? And then there'll be some scandal on one of those, as you know, a bunch of people get sold a narrative right as it dips, and they, you know, God forbid if they're doing it on margin, but they find themselves in trouble, and they lose their money, get liquidated, whatever. And I have a feeling that will just slow things down, like this sort of Wolf of Wall Street orgiastic picture that you were painting. While it got my blood pumping and I was excited, I wouldn't participate in that madness, but I could certainly see how that would be thrilling, because I think that volatility is a feature, not a bug, which was a weird realization for me, that I found myself moving towards volatility, not moving away, even though I would advise other people like, hey, you have to be really careful. It's so volatile. But I was like, wait a second, that's actually why I'm doing it, is because I have a thesis that I think will overcome the short-term volatility, but I want that. I want the opportunity to buy low so that there's ultimately the shot at selling high. Okay, so slow. I think the train wreck will happen so slowly that it might be more imperceptible than we think. How long can we print money before that bad thing happens in the bond market? And I'll set the table with Japan. As far as I know, they print money like fiends. Is there an obvious breaking point, or are we like at the 10% of what we can print mark, 90% of what we can print?
So let's use two countries, and the big narrative, and this is sort of the Keynesian modern monetary theory MMT crowd, is the government, there's infinite capacity for the federal government to have debt. And the first example is, look at Japan. They have I don't know what the debt to GDP of at the government level is, like 300% or something. And look, this is perfectly fine. You go to Japan, everyone's nice, food's great, trains run on time, super safe, blah, blah, blah. What they don't understand is what Japan actually did. And there's a great report by Deutsche Bank, and I forgot what it is. And the label is Japan, the biggest carry trade ever run. So everyone always looks at the central government's debt to GDP and they say, oh, it's ridiculous. They forget that, you know, they think Japan, if you've ever been to Japan and done any business there, you'll realize that Japan is a socialist country with capitalism that was hoisted on it. They're a very collectivist culture, and I'm not saying that in a negative way. That's just how they are. So you have to combine things that you otherwise wouldn't believe as into one to get the real financial picture of Japan. So you have to look at, okay, yes, you have government debt. Then you have the corporate and private sector of Japan, the people of Japan. They own something like $3 trillion worth of assets around the world. Japan is probably the richest country in the world on sort of an aggregate basis, because what happened after the war? The US made Japan a colony for a bit, lent them a bunch of money, helped them get off their feet, and said, we're going to give you access to our market. Please sell us shit. The Japanese said, great, we're going to essentially subsume the individual and promote the collective. So everyone we're going to financially repress you, but we're going to make really, really good stuff. You're going to have a job for life. We'll pay for your education, healthcare, cheap transportation, good food, work really hard so that these major companies can sell great stuff to America. And that's what Japan did. They started with America, then it went to Europe, then it went to China and Southeast Asia. They are the largest holder of US treasuries, which is just the savings of the nation. Plus, they own in total about $3 trillion of just assets, mainly in the United States, but around the world with all their savings. So if you add that back to their debt, and then you add back the private savings of people, which is estimated of like $5 trillion of just money and just sitting in bank accounts of the Japanese people because they haven't spent anything for the past 30 fucking years because of the deflation that they've been having, you get a much different picture. You get a debt to GDP of around like 100%, something much different. So Japan can print all this money because it owns the fucking world. They're not that broke. And so people say, oh, Japan just prints a bunch of money. It's okay. Yeah, it's okay because they were extremely productive. They had a captive market in that the richest country in the world, from a GDP perspective, America, they could freely sell anything they wanted into America. And that's how they got so wealthy. So that's the Japan example on the why it doesn't really work. Then you get to China. China says we're completely state socialist. Again, not saying that in a bad way. The central government owns essentially all the most productive companies. And we are going to debt finance our way out of the poverty of the 1949 to 1980s, right? Massive transformation in the society. And there wasn't an infrastructure project that China didn't love. And they've run up with something like a 300% debt to GDP. They built all this stuff. Now, if you believe that debt, you can print as much debt as you want, then why isn't China responding to this property bubble by printing as much money as they can and just doing the same thing they did for the past 20 years? Because they've reached the capacity of the amount of debt. They know that the more debt I spend, I produce no value, and I just make the problem bigger. I create more angst amongst the population. I create more desire for people not to have children. I create a declining population because people, cannot make ends meet because I've just overproduced and there's just not enough real return there. So there is an internal capacity. So China and Japan are probably the two examples that prove the point that I'm trying to make, which is there is a capacity limit for debt. It's not some number that we know once you go higher than this that things automatically happen. There's a paper by Ken Rogoff, I forgot what it is, and he did a study, and basically the study was that once you get above about 130% debt to GDP on a government level, then you're assumed to have a financial crisis sometime in the near future. Now, again, you can't put a time frame on it. The US is around 130, 140%. So it's on that path to doing so. Does it have capacity to load itself up with a lot more debt? Absolutely. China's at 300% GDP, right? So you can go that far, or even farther maybe. But again, then you start to have the decay in society. You get to have this moral angst that is amongst the population who feel it. They can't put their finger on why they don't feel confident or why they feel angry. But the reason is that the government has, again, taken away their dignity by fucking up the monetary supply. So again, I don't know what that number is. We're in the territory where something could happen. And so my thought is, as an investor, I want to be long that volatility by being long a put option on the sovereign bond market, which is crypto. I don't know when it's going to happen, but it's going to happen if they continue doing these same things. So why not buy something where I have insane upside if it fucks up? And what's my downside? It's a super liquid asset. As soon as if it's not working, then I sell a bit of it, whatever. So I have an asymmetric return.
Debt, the debt flywheel. How is it possible, given our need to, at a minimum, make interest payments, that we aren't already in trouble? So I think right now, our interest payments are already our third biggest line item. It's more than our national defense. We're adding $1 trillion to our debt every roughly 100 days. That will compound So what takes 100 days now will be 95, and then 90, and then 80, and then 60. I don't understand how we're not at the end. What am I missing?
Because there's so much money trapped in the TradFi Western financial system, it's there to be inflated. It's there to be taxed. Every dollar you have in your retirement account, every dollar you have in your TradFi big account, every stock that you hold that is required to trade on the clearing functions of the US or the European governments is ripe to get taken by the government via an inflation tax. So that's how they're able to do it, because this capital is sitting around and not doing anything. The pension funds are forced to own government bonds. The banks are almost forced to take their excess reserves and buy government bonds. And so that's how they're able to keep the game going, because there's all this capital that's sitting around that they can inflate away. Now, that's why crypto is such a fundamental problem, because it's an escape valve. It's outside the system. I take my fiat, I sell it, and now I buy Bitcoin. Can't take it away from me. You don't even know I have it. And so that's why the ETF is such a key component, which is, okay, recognize that we have a problem. We're not going to change our spending. We don't want to outright ban the thing. Okay, now it's time to allow these fund managers to ingest this fiat into a derivative, but keep the Bitcoin within the system. So that is why you can afford to do this. And of course, the US is a reserve currency issuer, largest military in the world. Again, you have the ability as the empire to do this a lot longer than other countries can. Now, to the extent that other countries stop saying, I'm willing to sell you oil or food or whatever in dollars, then the ability to keep this game going, the time frame diminishes.
Yeah, what do you think about the petrodollar being used to have at least a response to our financial warfare, which may be a little unfair, but when we, for people that haven't thought through this yet, when we inflate the currency, that spreads it to people like Japan that own trillions of dollars in bonds. So we're exporting the inflation tax. Do you see people weaponizing that? Do you think, because I've heard people say, oh my God, de-dollarization is imminent. And I've heard other people say, get out of here. There's literally nothing else. So people would flee the dollar to what?
So I think that they're missing the point. So de-dollarization started in 2008 when the US authorities decided that they're going to save the banking system by this massive money printing. And if you look at the charts and you take a look at amount of gold that foreign central banks started buying, with the nadir was in 2008. Now it's ticking up. Similarly, for the effect of foreign central banks on buying US treasuries, the height, 2008, now it's tapering off. So de-dollarization is happening slowly at the margins. The Roman Empire, the British Empire, these empires didn't fall like overnight. It's not like overnight you just stop using these currencies. It's a slow process. It happens at the margins. We're already seeing it in 2023. 20% of all oil sales were in a currency other than the US dollar, highest ever. So the petrodollar is breaking down slowly at the margin. Of course, the Western world and the US major allies are going to continue using the dollar, whether China, Saudi Arabia, whoever uses it or not. That's not the question. The point for an investor and trying to save is, okay, align myself with the trend, but don't get blown out of water if it takes a long time. If de-dollarization is a trend, if the trend is to have a multipolar situation of currencies being used, what do I know that central banks and countries have used in the past to trade between themselves to settle debts and trade flows? Gold. Okay, that's why I own gold. I own gold because I know the countries who are not going to use the dollar to settle their trade imbalances will use gold and are using more gold. I want to be alongside that trade. Okay, well, what about the people? The people don't want to continue to be fucked over by inflation, whether they're rich or poor. Here's a global decentralized digital system that anyone, rich or poor, can access. Okay, I want that system too. Another put option on the current order of things. And again, I think people try to get moralistic about it, like right or wrong, like I believe America's good or bad. It doesn't matter. All I'm saying is we're going to change, and I want to be long the change. And I don't know what it's going to happen in the future. I just know it won't be like it was yesterday.
Is there anything right now that is a plausible replacement for the dollar? Is it BRICS, I know, is trying to back their currency with gold. I think central banks are buying up gold. Is it a return to a gold standard? Is there another governmental currency that has more respectability, less inflation?
I would say that, in my view, the most likely outcome is that countries will continue to use the dollar or whatever currency is to trade amongst each other. So let's say that I have some oil, but I also import food. So if I sell more oil than food I need to import, I say, okay, don't pay me the difference in dollars, pay me in gold. But I can still invoice my oil in dollars or whatever, depending on who's buying it. So I don't think there's going to be one particular global reserve currency. I think there'll be different economic spheres, and the trade between those economic spheres, the nets of that trade, will be settled in gold.
Interesting. Okay. Are you surprised at all that gold does not go up in a similar fashion to Bitcoin?
No, because gold is different. It's bigger door. It's not digital. It's not the new thing. The drivers of gold are very, very slow and methodical central bank purchases. The crazy volatility in gold will be when, let's say that, the U.S. government wants to help the situation. They devalue the dollar in gold and say, okay, I think the gold on the Fed's balance sheet is held at $35 an ounce, same price it's been since 1970s, right? They say now our gold on the Fed balance sheet is valued at $10,000 an ounce, which is basically them devaluing the dollar. Gold shoots up massively, and now all of a sudden, a lot of these financial problems go away because the Fed has so much gold, they're valuing it at a certain price, and now the dollar is seen as a stronger currency. So that's a situation that could happen, which would massively one-off increase the price of gold by 3 to 5x. And other countries could do the same thing, who hold gold at an artificially low value, but could revalue it higher on their own balance sheets. So that is probably the gold bull market scenario that I'm that's why I own the thing. That's the optionality that I'm playing, is a revaluation by central banks to make their currency seem stronger in gold terms.
I've never heard that before. What would trigger that?
Oh, a war, budget crisis. I mean, the same things that, the government's done in the past, right? When the gold window closed, I think the FDR depreciated the dollar in gold terms by like 80% overnight or whatever it was. But obviously you couldn't own gold as a person. He did it after that. He said, okay, I'm going to take all your gold. Now I got all your fucking gold. Guess what? The gold is worth way more dollars now. Sorry. So I think that's a sort of a situation that could occur.
Okay, let me see if I understand this. I don't understand this. Why would you want to make gold more expensive? What do you plan to do with that? Buy more gold? Buy more dollars? Like, what are you doing?
No, you already have a bunch of gold. So at least the US is a very stark example. The US Federal
Yes.
Reserve has however many metric tons of gold, a lot of it. It's held at, I think it's $35 an ounce or whatever that price is, a very low value. Gold right now is valued at
But are
however
they
many.
artificially holding that price down?
They're not holding it.
Or
They're
is that-
saying this is what we value gold at. So our balance sheet. If you think about what's a dollar worth, it's worth the assets that they hold. What's the only real asset that the federal government has in a monetary sense? It's gold. How much gold do you have? What do you value it at? So US being the reserve currency issuer could say overnight, we think that gold is worth $20,000 an ounce. And guess what we have? I don't know how much they have, and so all of a sudden I was like, oh, shit, they've just devalued the dollar in gold terms, but they own a bunch of gold. So now the dollar, instead of being a US Treasury backed currency, and the US Treasuries are trash because of all this spending, it's now a gold backed currency. And guess what? They've got a lot of gold and it's worth $20,000 an ounce.
So hold on. Sorry. My brain is just too small for this, but I really want to understand this. So are you saying that they are repegging the dollar to gold in this scenario?
Yes, well, it wouldn't be a peg per se. It's what do you think a dollar is worth, right? If you believe in this de-dollarization thing and that country's like, I don't want to hold the dollar because it's inflating away, it has no value, it has no assets backing that. I don't believe in the U.S. Treasuries. Well, then the federal government and the Fed could say, oh, actually, guess what? We've got all this gold. It used to be worth this. Now it's worth that. This new price that we believe gold is worth is massively above the current clearing price of gold. For certain individuals, we'd be willing to exchange gold for dollars. Not everyone, obviously, only certain individuals, certain probably sovereign nations. And all of a sudden, the dollar becomes a strong currency again because
But why on earth would a government do that? Like if I saw that you just changed the value of your dollar massively, why then would I exchange gold? Because I'm thinking, ooh, dollars are still great. I still want to have dollars and I have gold. And so now I'm going to get those dollars. Like to me, again, I'm sure I'm just missing something, but to me, I would see that as such a wild manipulation of the currency. I'd be like, I don't want anything to do with a currency that just changed
great.
3 to 5x
Then you
in
should go
value.
old Bitcoin. But this is how fiat currencies have worked in the past, and this was done in the 19.
What's the incentive? Is it
because
that
you have to
person,
devalue the currency. The U.S. needs a weaker currency. A weaker currency helps you sell your exports.
I get our
Weaker-
incentive, but something is only worth what someone else is willing to pay. Why is someone else willing to trade their gold for dollars in that scenario? Obviously someone is, or they wouldn't do it.
Well, no one has to trade anything. I'm saying the government itself says that we believe gold is worth this price. Right now, they say it's worth $45 or $35, whatever it is on their balance sheet. Now it's worth, we will exchange gold at this price, way up here. And they're able to do that because they own a fuck ton of gold. If you didn't own a lot of gold, then I would agree with you. Why would you do that? This is more with a way to engender a belief that the dollar has a large gold value. Well, okay, here's what we value gold at on our balance sheet. And we're able to do this because we're the central bank and you can exchange gold at this price now. It's much higher than the price that it is around the world. Now, that only works if you have a lot of gold. US has a lot of gold, China has a lot of gold, Russia has a lot of gold. So there is a thinking out there that any number one of these countries that have been accumulating a lot of gold could say, our currency is very strong. Guess what? We're willing to bid for gold at this high price. Therefore, sell me oil in my currency because you know that you're going to get gold at a very attractive price because this is what it's worth. Sell me medicine, sell me wheat, whatever it is. So it's a confidence game amongst other trading partners to say my currency is worth a lot of gold because gold has historically been the real currency of the world, not these fiat things.
Man, again, so that seems false. What you're saying is my gold is worth a lot of currency. My currency is worth a tiny bit of gold. If my currency used to be $35 buys you an ounce of gold, and now it's $1,000 buys you an ounce of gold, the gold got expensive. The currency devalued in its purchasing power. Anyway,
but I also have
the
a currency
audience
debt,
is probably
though.
tearing their hair out right now. Say that again.
But I also have a trillions of dollars of debt. So now my currency is devalued in gold terms, but I owe a fixed amount of debt, right? So another reason why you devalue your currency is, well, I owe a lot of it. I owe a lot of it, and now it's worth less. I've decided it's worth less, so I can pay you back. But you're getting paid back in depreciated dollars. Now, obviously, going forward, people who trade going forward have a different deal than people who have traded stuff in the past. So again, yeah, I agree with you. It's a fucked up way to treat people who have invested in your bonds. But again, it's another option that you can use as a sovereign country is devaluing your currency in gold terms to pay back an unsustainable debt load. If you don't want to outright default by saying, I'm just not going to pay you back. Instead of saying that, you're saying, okay, I'll devalue in gold.
I'm going to say, psych, it's worth like 1/10 of what you thought it was worth. That's crazy. I can't believe that they can do that. Insane. Okay, let's talk about all the liabilities since we're on the subject. Do you think that the US, so going back to this idea of Argentina comes in, they slash spending, For the US to get back on track, they would have to slash spending. Social Security is basically a pyramid scheme. Would they be wise to lop off Social Security? And could you see that actually happening with any sort of political plausibility?
In the United States, given that boomers are more politically active, I would say that it would probably be a death sentence for most politicians to try to take away those health benefits. Now, a very skilled politician who's able to get a lot more younger people out to vote and explain to them how they've gotten fucked over by the old people in the country, if that person's able to do that and put in that kind of work, then yes, I think that, you know, a reformation of the United States' healthcare system could be on offer. But if you're not willing to put in that sort of political work to re-energize the younger constituents, there's no fucking way you'll be able to do it.
Did you see the video that Ben Shapiro posted about retirement and Social Security?
No.
It's very interesting, lighting the internet on fire. And he basically said, look, Social Security is not going to play out the way that you think. You're probably not going to be able to reap the benefits. Not with people retiring as early as they are. You should, you know, look at pushing retirement back or removing retirement altogether. If you look at managing a fiscally responsible country, is that an option on the table for you, or do you think that there are better ways to get that done?
Absolutely, you should remove. I think these programs are great for the people, you know, the boomers, right? They're the biggest beneficiaries of all these, you know, around the world. These sort of like social security programs, depending on how you pay for them, and removing them would remove that dead weight. But I think at the other end, you also need to sort of reform, like, you know, global sick care, which is the health industry and the misaligned incentives, right? People shouldn't be dying the way they're dying based on the shitty food that we eat and the overprescribed medicines. There shouldn't be, and that's why people think, oh, I need to have this health care because everybody gets sick. Why does everyone get sick? Because we eat fucking processed food and all this dog shit that's, you know, put out to us as healthy. There's a reason why everybody spends the majority of their money in the last like 2 years of their life dying of horrible cancers and heart disease and all this kind of shit, right? We're poisoning ourselves every single day with these fucked up food chains. So I think it's not just let's remove the retirement benefits and the healthcare as well. Let's get at the root problem of why do we treat people the way we treat them in the healthcare systems around the world. Let's have a better relationship with food.
Yeah, one thing I don't think people really understand is that you can, obviously, because we print to make all these problems go away, but if healthcare costs, you know, let's say 10x what it needs to cost if people were actually healthy, you are quote unquote bankrupting the country, and that you get to a point where there's no way that the productivity of the country could possibly match that. So you've got the interest payments just absolutely insane. You've got sick care management insane. You've got Social Security, retirement. All of it becomes really unmanageable. Until recently, I had no visceral relationship with how those expenses actually played out in terms of the budget until I started looking at how much the government spends versus the actual GDP of the country. That stuff gets very scary. And that's why we race towards war. We flood into crypto. It all comes back there. All right, then let me ask you, where does ETH go? We've talked about Bitcoin. Where do you think ETH goes from where it's at now?
Oh, maybe 30, 40,000.
Whoa. That's mahusive. What do you think gets us there? Just the knock-on effect of everything that happens to Bitcoin has a trickle down to ETH?
Trickle down. You have the ETH ETF, possibly the Ethereum is the decentralized computer, and the decentralized computer has a commodity, the ETH, the currency that pays an intrinsic 4% yield, which is the staking yield of ETH. It's the only, you know, crypto asset of that size that has this intrinsic yield. And that's going to draw a lot of, it's the internet bond. It's the bond of the internet computer and pays you a yield to own it. And so I think that's going to be a very powerful narrative as people start to think a bit about more about what ETH actually is. And they're going to allocate and say, oh, well, not only do I get sort of this deflationary, you know, network value increase in the ETH, the currency, I'm also getting paid 4% yield in ETH. Where else do I get that sort of return? That's great. I want to allocate to this. And there's all sorts of different interest rate strategies you can do around that. But I think that's going to be a big narrative for people who are going to get into ETH and understand, oh, great, I get to participate in, let's create a new digital internet on DeFi and I get 4% yield.
Why do you think that right now ETH seems to be more to the upside? I don't know if this is true to the dollar, but it seems to be more to the upside than Bitcoin. So I'll see Bitcoin dip, but ETH just keep going. Not that it hasn't had its own dips, but are people pricing in the future in a greater way than they're pricing in the reality of Bitcoin today?
I don't think so. It's a smaller asset, right? So smaller things move faster, just law of large numbers. So I'm not really, yeah, I don't think so.
So do you think its rate of increase will speed up if an ETF goes?
For sure. Just like Bitcoin, just more assets. And, if people are actually using the Ethereum network post the merge, it becomes the supply of ETH actually declines. So there's less ETH available the more people use the thing. So if we believe in DeFi and the network activity grows in DeFi because more people know about it, they want to experiment, then not only the total supply of ETH declines, and then you have the ETF, taking ETH out of circulation as well. So you get sort of a double whammy effect on sort of the price on the upside.
The narrative that I've been hearing is you're going to get big gains in Bitcoin, you're going to get bigger gains in ETH, and then you're going to get even bigger gains in Solana. Is that just, one, do you agree with that narrative? And two, is that just a law of large numbers? Or is this people seeking out the highest volatility, clearest narrative assets?
I guess timing is everything. So we think about last cycle. So Bitcoin went down went from 69,000 down to 16,000, right? Solana went from 250, I think, to 7. So yes, from 7 to 250 is going to be a bigger return from 16,000 to 69,000, right? It's the path dependency of returns and the time in which you get in and out of an asset. So you could make much more money on Solana or some other much lower market cap shitcoin than you could make in Bitcoin. But if your ass doesn't get off the train at the right time, you're going to get absolutely wrecked. Versus Bitcoin, yeah, you might get wrecked, but it won't be as bad as going from 250 to 7. So again, it's one of those things, right? Yes, you can make more money in lower market cap shitcoins, but if you don't time it right, you're going to lose more on the downside. So you have to sort of balance those two together.
All right. As a trader, you seem very comfortable with what I'll call trading on culture, trading on trends, momentum. Because when I talk to people about why I'm a believer in Bitcoin, why I'm a believer in Ethereum, I can say very robustly that I have a thesis around where the world is going, and those are going to be long-term adoptions. They're not fugazi, as you have said about other things, including the TradFi system. There's just something really intrinsic about them. Now, there's a flaw in the Bitcoin thing if it can't, whether it's ordinals or whatever, whether it can't become another thing, which it has that sort of looming specter. But that narrative, digital gold, it being the store of value, makes sense. Ethereum, world's computer, it's a bond in the distributed world's computer. Cool, those make sense. Beyond that, when you get into NFTs, maybe Solana, although if they can speak to maybe gaming, Web3 gaming or something like that, then there could really be a core thing there. But I have a feeling that's not why you're trading on it, that this is really just about, people get hyped about a thing. I'm able to read the tea leaves. I see what they're getting hyped about. I know the signs to get on the train. I know the signs to get off the train, and I trade on that. Is that an accurate assessment?
Yeah, so I believe that I have at least for the assets that I have large in my portfolio, I have a fundamental understanding of like what they are, what they're not. And I can trade on the narrative and know when the narrative gets out of whack with what they fundamentally are, then maybe it's time for me to step off. Versus I don't understand what these things are. I've never read the white papers for Bitcoin or Ethereum, or reading research from very much smarter individuals on the like technical things that are going on. I just know what I read on Twitter. Your ass is going to get wrecked because you don't even know whether you're believing in something that's true or false. At least if I know I'm trading a piece of shit, I know it's a piece of shit, and I'll size my position accordingly.
That's interesting. Okay, so everything is gambling. Getting in the elevator versus walking up the stairs is a gamble. I think that people would do well to conceptualize all of investing to an extent as a gamble. Know where your break points are. Know what your risk comfort is. Make your decisions accordingly. Dude, every time I get to spend with you is absolutely amazing. Where can people follow along on your insane journey?
So on X at Crypto Haze, I have a Medium as well, Crypto Haze, and a Substack, Crypto Haze as well. So I write long form articles. I hope that you can stomach a half an hour read. I think it's some interesting information, or you can read my bite-sized information on X.
I love it. Everybody, if you haven't already, be sure to subscribe. And until next time, my friends, be legendary. Take care. Peace. If you like this conversation, check out this episode to learn more.
You are being slaughtered and you don't realize it.
There could be a dollar crisis.
They're debasing the currency by 15% a year.
I mean, it is inevitable that it's going to happen. I'm not saying everybody is wrong. I'm saying the people that believe in Bitcoin are wrong.